impact for some time, but there was also data yesterday that should have been out of the US that should have been bullish for oil prices. But instead, we're still seeing them quite soft. Brent is about flat at the moment, but WTI is down in the day. I think that this is a real reflection of what's happening on the Delta variant and the threat there.
Okay, Mark, thanks very much for spending the past hour with us. Really good to have you with us as always. Mark will be back tomorrow. I'll be back in just a moment with the start of the European equity trading session. And European equity market futures are pointing to the upside. As we said, US futures look a little bit more muted. NASDAQ futures up by 0.1%. The European Open is next. This is Bloomberg.
What seems to be a really tough situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
Welcome back to the European Market Open. A minute to go until the start of cash equities trading. Here are your headlines. Asian stocks and European futures edge higher as concerns over China's latest technology clampdown ease amidst a mostly positive earnings picture globally. China sees its broadest COVID outbreak since the beginning of the pandemic, prompting GDP downgrades for the world's second largest economy. Plus, Commerzbank sticks to its revenue target despite earnings missing estimates. The lender's CFO tells us that they are making good progress on the restructuring plan. Good morning, everybody. 20 seconds to go until the start of the European equity trading session then for this Wednesday morning. And European equity markets are pointing to the upside. We've got a lot of earnings, as always, or certainly as always this week and last week, to digest. We've had earnings out of Commerzbank, from Siemens Energy. So lots to talk about this morning on those individual names. Hugo Boss, we were talking about that just ahead of the break. So a lot of German corporates, in fact, reporting this morning, but also UK house builders in the shape of the conversation we had with Taylor Wimpey just a moment ago. So lots to talk about on the earnings front. The bigger picture story seems to be picking picking up on a lot of the mood music coming out of China right now. So where does that leave us as we open up our European equity markets? We have the Stoxx 600 up by 0.3%, the IBEX in Spain up by 0.3%, waiting for the CAC and the DAX to open. We're coming off a session that hit new all-time highs on the S&P over in the United States, so perhaps that will add a little bit of movement to the upside. Up by 0.4% on the CAC 40 this morning. So we are making gains across these European equity markets. As I mentioned, some of the news out of China is having an impact. China is experiencing its broadest outbreak of the coronavirus since the beginning of the pandemic in late 2019. The outbreak is fueling growth concerns and hampering travel and tourism during the peak summer holidays. Joining us now is Karim Chedid, BlackRock Head of Investment Strategy for iShares at EMEA. Karim, really nice to speak to you then this morning. So there's some negativity around China. There's also some positivity in the mood music around regulation of the gaming industry. Perhaps that's turned a little. Where you see China at this point, and whether you're seeing.
Thank you for having me, Anna. When we look at China, there's signs of macro easing coming through, and we saw this in the recent triple R cut, but then also signs of what we're calling micro tightening. So really at a regulation level, as you point out, signs of tightening, be it what happens with the education tech sector last week, or also some of the headlines this week around the gaming and digital entertainment industry. But taking a step back, we're seeing a couple of trends here. On the fixed income side, the buying of Chinese government bonds, and this is coming through in ETP flows, remains a very persistent theme. And with potential for more macro easing, which with signs of growth peaking in China, especially in the manufacturing sector, as with the latest readings that came out earlier this week, the chances of further macro easing are definitely on the table in the second half of the year. This case for Chinese government bonds remains very, very strong, and so expecting these flows, this investor demand, client demand, to continue in that space. So macro easing, chances of that continuing, supporting the case for Chinese government bonds. On the equity side, a bit more volatility in Chinese equities, although on a strategic level, we remain overweight and see room for China as a standalone allocation in client portfolios.
Right, you say that you remain overweight then on Chinese equities, Karim, and you say that the returns more than compensate for the risk when talking about China. What is your tolerance then for a slowdown in growth? With those things in mind, with that overweight position in mind, what kind of slowdown, what kind of clamp down on the Delta variant spread could we see in China, and would you still be able to be that confident and make those statements?
That's a great question. I think here we need to break it up on the equity side into the tactical horizon and strategic horizon. On a tactical horizon, so the rest of this year, there's room for a bit more volatility in the equity market, especially as we digest the signs of growth peaking, especially as we digest what we've seen in China is that the economy was the first to rebound globally and finished last year in the green. And now in 2021, it is the first to show signs of peaking. And with some of the localized restrictions around the resurging Delta, we could see a bit more downside risk here to growth. And so in the near term, we're neutral Chinese equities, taking on board all these risks. But then on a strategic horizon, Chinese equities remain one of the highest return potentials, and so as you say, the equity risk, the valuations already priced in compensate for those risks on the strategic horizon. So the case here remains strong, and things are perhaps getting a little bit more bumpy around signs of growth peaking, but remain attractive on a strategic horizon.
And thinking about signs of growth peaking, Karim, is that the story in the United States as well? With the recovery from the worst of the coronavirus underway, I suppose, in the US, how long do you see that carrying on for, and when does that peak? And we should all see that coming, surely. So how significant will that be?
It's starting to come through. We saw the ISM reading earlier this week. Also in the manufacturing sector, signs of peaking. I think with the NFP, things are a little bit different later this week. There's a bit more room to go when it comes to the labor market recovery. But on the manufacturing side, yes, we are seeing some signs of growth peaking. And we need to take a step back here. This is the shortest, even though it's the deepest, it's the shortest recession in the past century, really, since the Great Depression. So, especially in the case of the U.S. economy. So we've contracted really quickly, but we've also rebounded very, very quickly. And so a bit of peaking or plateauing in data is not a big problem in the greater scheme of things. But yes, it is starting to come through in the U.S., and we should expect it.
Yeah, the pandemic brought about a quick collapse, and then we've seen this strong rebound. Karim, stay with us. Karim Chedid, BlackRock Head of Investment Strategy for iShares EMEA, with us this morning on the European Market Open. Coming up then on this program, equities look past increasing COVID concerns as European stocks set records amid encouraging earnings. We're seeing once again strong performance for European stocks. We'll talk more about that next. This is Bloomberg.
Does that include overseas companies making them if they...
In America, absolutely. You know, Samsung, TSMC, there are companies that are in allied countries, and, you know, we certainly want them operating in America and producing chips in this country, yes.
So we have a significant chip issue, but there are other supply chain issues as well. As I know you're monitoring what's going on. Where have you seen other problems in the supply chains right now in the United States that need to be addressed?
Particularly in home building supplies, you know, lumber and all the related supplies, glue, adhesives, and you see it playing out. You know, home prices are high. If you go to Home Depot or Lowe's, you'll see prices are a little bit high, and that's all because of the lack of supply, just disruption.
Exceptional Q2. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
Global semiconductor shortage has been impacting us.
It's been quite a whipsaw for us in the industry.
We're managing it week to week, day to day.
The chip shortage will continue probably throughout, I would say, maybe first semester of 2022. We'll have some, let's say, some fluctuation, some uncertainty and lack of visibility.
It is important to have the continuous monitoring in the situation and how we can anticipate the supply situation.
This is out of our control, essentially. It does seem like it's getting better, but it's hard to predict.
I think we have overcome chip shortages so far quite well, so we could rearrange.
It's something that we're going to have to deal with through the rest of the year and potentially into 2022.
We have a lot of customers wanting to buy our cars, and we would like to build more and sell more. We don't see really that that's going to improve.
A host of auto executives there, really interesting, their insights into the chip shortage that the industry has been facing, dealing with for some time, and in some cases they continue to see that they'll be dealing with it in the second half of this year. Let's have a look at some of the movers then this morning. We've had lots of earnings out and they are making themselves felt across the European equity market space. So let's start with the banking sector. Commerzbank moving to the downside in the context that we saw actually some banks do well yesterday, some French banks do well, and that continues to be the case today. Commerzbank moving lower, down by 3.6%. The revenues dropped by 18% year on year, came in below estimates, and a net loss was worse than expected. So all of that sort of basics of the earnings report, I suppose, weighing on the business. Taylor Wimpey also in focus. This business, we talked to Pete Redfern, the CEO, a little bit earlier on this morning. The share price up by 4.4% after their first half results. Their full year profit guidance seems to be a little more optimistic. Full year UK completions, excluding JVs, will be at the top end of the range. So that was positive from Taylor Wimpey. And we had a really interesting conversation actually about the extent of the wage pressures and labour shortages and difficulties with materials. He was certainly emphasising the latter there, the pricing of those materials. Legal & General up by 2.5%. We also spoke to Nigel Wilson from this money manager. A double-digit growth in operating profit at the full year. That's what they expect to deliver, and they have delivered in the first half. Return on equity of 22%. So a very strong story being put to us by Nigel Wilson a little bit earlier on. Investing in real assets, always the theme when you talk to Nigel at Legal & General. Let's get back to our conversation then with Karen Chedid, BlackRock Head of Investment Strategy for iShares EMEA, who's still with us. And Karen, this makes me think about the earnings season and the way that it has been comforting perhaps for global investors when we're dealing with concerns around the Delta variant and what that does to global growth. We have seen a number of companies beating estimates and giving us these upgrades and positive narratives. Are you taking positives away from the earnings story?
I am. When I look at the earnings season, and we're well into the reporting season now in the US as well as Europe, one of the key takeaways is even though analyst expectations were pretty optimistic going into these numbers, especially taking into consideration the base effect year-on-year earnings growth estimates were as much as 100% year-on-year in Europe and under that, just under that in the US, beats are still quite strong. In fact, in the case of S&P 500, beats are at historical records. So positive analyst expectations, but numbers even delivering above that. So definitely a lot of positives to take away from this season. Cyclicals have been driving this for sure, which is a nod to the powerful economic restart that company earnings are benefiting from.
Growing, the lockdown winners have a lot to prove right now and maybe have not been well received during earnings season. Where do you see those lockdown winners heading?
So technology sector, which obviously held up very well during 2020 and during the extended lockdown, has been coming through quite strongly in this reporting season, even though the base effects don't work in its favor. So unlike cyclicals, which have been delivering from a very low bar in 2020, technology has been building strength on strength. And so we're seeing that really come through, especially in the US, where technology, which also ranks highly as a quality sector on the quality factor with high ROE and strong balance sheet fundamentals, it's coming through. So it shows how strong of a structural trend this is.
Yes, and so do you see it as a one-time boost then, Karim, or has this been something more structural that will then remain? You know, are these tech names, are they going to lose the customers they acquired during lockdowns, or they benefit from that structural shift and they keep it?
Well, when we look at the penetration rate that these technology companies have increased in terms of their consumers, their users, we're running at anything between 2 times to 3 times penetration rate relative to before the pandemic. Even if we see some moderation, you'd be hard pushed to believe that gain in customer base will decline back to pre-pandemic levels. So I think a lot of it is structural. A lot of it is here to stay. And I think that's what the earnings from those companies are telling us, that even when the cycle shifts to cyclicals, they still do well. And so it's early signs of a structural theme that is here to stay. And we see it as well in the flows. For example, in July, cyclicals saw some outflows because in July we saw a bit of a comeback from that cyclical rotation that has been such a strong theme earlier in 2021. And within that, technology, however, started to see a resurge in flows, and it's actually the top sector now in terms of inflows in ETPs year to date.
Can I ask you about the clues you've been getting around the inflation story, Karim, from this earnings season? We talked to a lot of executives about the pressures they're feeling from input costs. And I mean, anecdotally, we hear a lot of people, they're still concerned about those. They're reporting backward-looking earnings, and they're also flagging that maybe this remains. We certainly heard that from some of the auto executives. What are you hearing about inflation and the input costs, and what does that lead you to conclude about inflation?
So I think here we have to look at the consumer side of things as well. When we look at household savings, on average, in places like the UK and the US, as we came out of lockdown, average household savings were at historical highs. So when it comes to companies and the increase in input costs, what companies are thinking is, can I pass this on? And how much of it can I pass on? I don't think they're passing on the whole rise in input costs, but they are passing on some of it because of the belief that they can, because of the household balance sheet picture, which is a strong picture. And so that means that there is going to be some pass-through to the CPI basket. So there is some pass-through to inflation rising, inflation pickup. However, it's not a problematic runaway inflation, at least not yet, and nowhere near.
Karim, thanks very much. Really good to speak to you. Karim Chedid, BlackRock Head of Investment Strategy for iShares EMEA. And Karim will be speaking to us on Bloomberg Radio. He'll be continuing the conversation with Bloomberg at 8:50 a.m. UK time. Let's get a Bloomberg Business Flash. Here with the latest corporate news flow is Laura Wright. Laura.
Thanks, Anna. Hedge fund Alphadyne Asset Management has become one of the biggest casualties from a short squeeze in the global bond market. Its $12 billion macro trading strategy snared in a series of bad bets on rising interest rates. The investment firm is said to be facing losses of about $1.5 billion after its hedge funds plunged during July. The company has never had a down year since it started in 2006. Lyft has delivered its first ever adjusted profit after racking up losses since its founding. It reported second quarter adjusted profit of almost $24 million thanks to surging demand for its ride-hailing services and last year's deep cost cuts. Lyft says it will continue to pay incentives to entice drivers to return to the platform and address a shortage. SEC Chair Gary Gensler is signaling a pathway for approving a Bitcoin exchange-traded fund, a move that crypto enthusiasts say is crucial for taking tokens mainstream. In his first major speech on cryptos, Gensler said an ETF that complies with the SEC's strict rules for mutual funds could provide investors with necessary protections. Previously, the agency has shied away, citing transparency concerns.
Right now, though, in this digital scarce speculative asset, Bitcoin and others, we just don't have enough investor protection. And frankly, at this time, it's more like the Wild West than some sort of protection against fraud and manipulation in the space. This asset class is rife with fraud, scams, and abuses in certain applications.
That's the Bloomberg Business Flash. You heard it there, Anna, the Wild West.
The Wild West of crypto. Laura, thanks very much. Laura Wright here in London. Now, coming up on this programme, the UK is considering just on that Bloomberg scoop next. This.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Demand for transatlantic flying has significantly increased. So while the US is closed under the 2 and 2F to Europe and UK, US citizens can travel freely. And I'm actually quite glad that the EU and the UK has opened up and hasn't demanded that the US reciprocate. I think that will take a little bit of time, but I do believe that we will get there. We expect business travel to recover, but to lag the recovery in leisure travel. I think there is some degree of acceptance now that business travel may not recover to the same levels as 2019, but I don't think it will be as impacted as some people believe as a result of technology.
That was the IATA Director General Willie Walsh talking about the return of international air travel. Now, Bloomberg has learned that the UK may block a takeover of the chipmaker ARM by NVIDIA, citing potential risks to national security. NVIDIA is the biggest US chip company by market value. Last September, it announced a $40 billion deal to acquire ARM from Japan's SoftBank. A report by UK regulator, the CMA, is currently being considered by ministers. Joining us now for more is Bloomberg Intelligence senior analyst Anthea Lay. Anthea, what could SoftBank do should NVIDIA, the NVIDIA ARM deal fall apart? We don't know if it will fall apart. I mean, it would be going from Japanese ownership to US ownership. So you wonder what problem the UK authorities would find there. But what would the option be then for SoftBank?
Yeah, I believe that if the deal does fall apart, it's bad news for SoftBank because it's going to forfeit $10 billion from NVIDIA and also shares of NVIDIA that are currently worth about $35 billion. Although we all mentioned the deal is $40 billion, but given that NVIDIA share has done extremely well recently, and also they will lose out their earn-out option, which is another $5 billion. So it's a lot of money that we're talking about. Having said that, I believe that ARM is a very valuable asset for SoftBank, so there are other options for SoftBank to divest, but it's a matter of time. Even if it is about an initial public offering, that would take longer time for them to monetize, and there may be a lack of synergy if they just go ahead and list the company on its own.
What about, I mean, sticking with SoftBank and the things that it's interested in right now? We understand it's made a $5 billion investment in Roche. What should we take away from that?
I think SoftBank is trying to definitely diversify away from, the heavyweight sector like ride sharing, especially China. It has a lot of exposure. So the investigation is still ongoing by the China Regulatory Authority, and there are rumors of privatization. So too many uncertainties there. Is a good option for SoftBank to go somewhere, looking for pharmaceutical sectors, and even geographically diversify into Europe and also Latin America. I think that's the right approach for the company. And also, just to remind our audience that their investment in transportation and logistics so far haven't really done very well in terms of return on investment. So hopefully, healthcare sector could do the better investment gain.
Okay, thanks very much. Thanks for joining us. Anthea Lay from Bloomberg Intelligence with the latest on SoftBank. So clearly a lot for European businesses to watch when it comes to SoftBank's strategy, whether that's in the chip sector and its intentions with ARM, or whether that's in the healthcare sector and pharmaceutical companies such as Roche, where apparently their interest lies right now. Coming up on this program, we'll talk more about the housing market. One of the world's hottest housing markets may have reached its peak. UK home prices slow down in July as the London exodus continues. We'll discuss Britain's housing market. We are working our way towards, of course, a Bank of England rate decision as well. And we've clearly had a lot of government activity in the housing market in the UK in the shape of tax incentives, which have now worked their way through. So lots to talk about when it comes to the UK regulatory picture, the macro story from the housing market, and the demand picture as well. We spoke earlier to Taylor Wimpey. They reported numbers, so we'll throw that into the mix as well. This is Bloomberg.
Is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour into our trading session for this Wednesday here on European cash equities. And we are making moves to the upside, up by 0.75% on the Xetra DAX. So outperforming, which is in contrast to yesterday where we saw German underperformance at this time of the day. The CAC 40 up by 0.5%, the FTSE 100 up by 0.4%. Let's have a look at the sector breakdown. No sectors, I think I can see that from the corner of my eye. No sectors in negative territory. There we go. And we'll just zoom out so you can see all of those. The travel and leisure sector getting the best of the gains, and technology also up there. Autos and auto parts, so all of that playing pretty well for the German markets. So the two of the top three, at least. To the downside, food, beverage, and tobacco. I can see that in terms of the travel and entertainment sector, it seems to be cruise lines and more the entertainment side of things that is rallying this morning, the likes of Flutter Entertainment. So that's what we've got on the sector breakdown for you, all of them in positive territory. Let's also just bring you some news lines we've heard from the ECB, because this is moving the euro just at the margins. We've seen these lines coming through from the ECB Governing Council member Martin Kazaks, who is the Latvian Central Bank governor. He leads the Latvian Central Bank, and he's giving us these comments about how the ECB won't rush to signal the future of the pandemic program. So anybody who's waiting for clues, really, waiting for a heads up from the ECB on the future of the pandemic bond buying program in the September meeting will probably be disappointed, so says Martins Kazaks. And as a result, you see a little bit of movement to the downside in the euro, not unwinding gains for the day, but certainly a little bit of movement in the currency as a result of that story. Let's get a Bloomberg First Word News update. Top stories we're covering this morning. Here's Laura.
Thanks, Anna. China's broadest COVID-19 outbreak since the beginning of the pandemic is hampering tourism and spending during the peak holiday season. Authorities have rushed to close tourist sites and cancel flights as the outbreak linked to the highly infectious Delta variant spread to nearly half of China's 32 provinces within just 2 weeks. At least 46 cities have advised residents against all but essential travel. The British Navy says a ship is now safe after a possible hijacking in the Gulf of Oman near Iran. UK Maritime Trade Operations, which monitors commercial shipping routes, says boarders have left the vessel after its earlier reports of a potential hijack. Last week, a tanker was hit by a drone attack in roughly the same area, killing 2 crew members. Iran was blamed by the West. More than 500 firefighters are reported to have worked through the night to contain a large forest blaze on the outskirts of Athens, forcing thousands to flee their homes. The fire was the worst of more than 80 that have broken out in a country over the past 24 hours. Greek officials say it's one of the worst heat waves of the past 40 years. Most children who get COVID-19 recover within a week. That's the finding of a large UK study which followed 250,000 children. The researchers quoted in the Lancet Child and Adolescent Health said about 4.4% of children with symptomatic COVID experienced symptoms for longer than 4 weeks. Fatigue, headaches, and loss of smell were most common. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Let's get to the UK housing market story, which has reached, or which may have reached, its peak, even as the end of the stamp duty holiday looms closer. Annual UK house price growth slowed in July, but the shift in behaviour caused by the pandemic means demand for more spacious homes continues. The Bank of England doesn't appear worried that the boom is leading to an unsustainable build-up of debt. In their latest financial stability report, they said mortgage-to-income ratios had risen only marginally. Joining us now is our real estate reporter here at Bloomberg, Olivia Konate-Ahulu. Really nice to have you on the programme then, Olivia. How important has this stamp duty holiday been then, this support we've seen from central government? How important has that been for this boom? And what can we expect now that that support is going to be coming to an end?
Good morning. So while we could say that it has been significant and that we have seen potentially a kind of slight slowdown in activity since the tax break started to taper off, I think what we could also say is that just the market conditions at the moment, with interest rates being so low, but also with the kind of really unique event that we've had in the form of COVID, locking everyone down and enabling people to remote flexibly, has boosted housing markets kind of globally. So we could say that although the stamp duty has helped the savings that they've actually been able to make are really quite minimal relative to the house price increases, and that the kind of demand for different housing needs is really potentially underlines the driving demand.
Yeah, suddenly, I mean, lots of real estate agents will tell you people want gardens and they want office space, and other people are renovating to get office space. Where has the market been the hottest? I know we've been writing quite a bit about those who want to leave more central locations and get out to suburbs and the countryside. What's the story been?
So So in terms of regions of the country, I think actually the more affordable areas have seen the biggest price increases. So areas such as Scotland and the north and Wales, where kind of these bigger houses that people are looking for are more affordable. And then in terms of, if we look at London, actually London buyers are buying more homes outside of London than ever, and they're also buying further afield, kind of further out into the home counties. So I think on the one hand, we're seeing people, as we've said before, looking for more green space, but they're also, I think, across the country just looking to upgrade, and that's helped if the markets are more affordable.
So put all that together then, Olivia, for us. What does all of that mean then for UK home prices in the medium term? If we're seeing a little bit less government support, but there are these underlying sort of structural changes maybe in the economy, new patterns of demand, what is the outlook for UK house prices?
So I think the general consensus is that we're not going to see the same level of house price growth, say, going into next year, and that it will slow down. But potentially there is still enough momentum to carry through to the end of this year. So I think Savills last week boosted their forecast for the year to annual growth to 9% for this year. But it's not going to be kind of as frenzied as we've seen so far. But it also depends on who's putting their home in the market, because at the moment, just a lack of supply is also helping to boost prices.
Thanks so much, Olivia. Yep, that perennial story, the lack of supply. Our real estate reporter, Olivia Konate-Ahulu, thanks very much for bringing us the latest thoughts. Let's stick with the story around UK housing. Taylor Wimpey, one of the UK's biggest house building companies, has swung to profit in the first half. It's posted a pre-tax profit of £287.5 million. That's up from a pre-tax loss of £39.8 million a year earlier. That was when the pandemic lockdowns forced the company, of course, to close building sites around the country. The CEO of the business, Taylor Wimpey, Pete Redfern, spoke to us a little bit earlier on this programme.
The stronger inflation is on building materials, and that's a combination of factors as the industry supply chain kind of recovers post-pandemic. And to be honest, I don't think there is anything the government can do about that. It's time. We see it improving, but it will take time. And I think because the construction industry, particularly new house building, has taken off strongly, sort of it's particularly acute. I think on people costs, there is also a time element, and people availability. There is a time element. We have invested strongly over the last 2 or 3 years in apprentices and in our own, sort of staff within our offices and our technical functions. We do tend to believe that the biggest responsibility sits within the industry to make those investments. Government can sometimes help us. And, on the pandemic, I think, I expect it to be a reasonably short-lived thing. It's a friction effect for us in the context of what's been pretty challenging 18 months in construction on site. So, sort of our teams are doing a great job of absorbing it, and, fairly confident that we'll come through the other side of it as we go through the summer. But I go back to, we came into this year sort of in a pretty strong place, and you can see that coming through in the first half, and we end the first half in a strong place as well. So whilst it's a challenge, we don't see it as being a dramatic strategic challenge for us.
I certainly keep on losing UK staff to the pandemic. You talk about investing in your staff. What kind of extra flexibility are you offering workers in this post-pandemic world?
So, I mean, most of our sort of office staff are not back in offices as yet. Sort of they're able to go back into the offices, but we're giving a lot of flexibility over the summer. Our expectation is, and it's what we've been talking to our people about over the last few months, that we will maintain a high degree of flexibility in as many roles as possible once we see, sort of offices fully open as we go into September and October. And, the basic message to our teams is, sort of for most normal office-based roles, if you want to work 2 days from home and 3 days in the office, that's fine. If you want to work 3 days from home and 2 in the office, that's fine. It's to be sorted out by individual teams. Where we have people who don't want to be in the office at all, I think we will ask some questions, because I think it is really necessary, particularly for young people, to spend time physically in the same place as the teams they're operating in. But also we'll ask questions where people are not working from home at all, because I think we'll question whether some of our own sort of internal management is constraining that. So we're looking to manage those extremes and give people a lot of flexibility in the middle.
The strong migration we're seeing from London to the suburbs, do we think this trend has largely played out now that COVID restrictions are starting to be lifted, or do we think there's more to come?
I think it's changed the perspective for people, but it is a little bit about timing. So, you know, and by timing in this context, I mean timing in an individual's life. There's always been a tendency for people to move at different life stages from cities into the suburbs and vice versa. And I think it's just accelerated that decision. So I think we've seen the high level of it played out. You know, we are positive about the London market long term. I think we have seen real growth in markets down into the southwest and up into East Anglia, and I think that is a long-term trend. And what we've seen the pandemic do is accelerate something that was already happening.
That was the Taylor Wimpey CEO, Pete Redfern, speaking to Mark Cudmore and I a little bit earlier on this morning. Coming up on this program, virus resurgence then in China. That's very much back on the radar. The country's broadest outbreak since the early days of the pandemic is fueling growth concerns and hampering tourism. More on that next. This is Bloomberg. Assess the sector as a whole? Is it making a better case for itself at the right price at this point?
Most of the big hedge funds, most of the people that have been growing have been delivering very good performance. We have, but so is a number of the peers. You know, it is definitely the hedge fund business is getting more about the large getting larger and generating more performance, being able to hire the best people, thereby generating better performance, thereby getting larger. So when you look at the performance of the largest, say, 20 or 50 hedge funds, the performance has been pretty good over a number of years, and the inflows have been pretty good. You know, this is another quarter of positive inflows for us. I think one of the bits you're seeing at the moment is every client is worried about inflation. When they say they're worried about inflation, what they really mean is, I own a load of bonds, is that going to cause me a problem?
Demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Yeah, so cryptocurrency is one of these things. It's a little bit like the parable of the blind man and the elephant, which is like people touch it from different sides and people get kind of, I think, distracted and carried away and get kind of energized on these different topics. We view it as it's a technological transformation. So there's a fundamental technological breakthrough that has actually happened, and it's an area of computer science called distributed consensus. So it's the ability for a lot of basically people and software on the internet to be able to form trust relationships in an untrusted environment. Money is one application of being able to have distributed consensus, but it's only one of those applications. There are many other applications, many other things that people are going to be able to do with this technology. And many of the smartest people in computer science are going into this field, and they're pushing it forward at a really rapid rate. So to us, it looks like it's just the 8th or 9th fundamental architecture change, breakthrough, technological transformation happening in the tech industry. And we take it very seriously because of that.
So your view is not whether Bitcoin is good or not, or worth X or Y, it's just that the whole technology that underlying Bitcoin is going to transform the world?
These are new kinds of computers. So this is the thing that gets very subtle. These are new kinds of, Bitcoin is an internet computer. Bitcoin is an internet computer that's spread out across hundreds of thousands of physical computers all over the world. It's a transaction processing system that runs without any sort of central location. You know, it's like a giant distributed mainframe, and it processes transactions. And out of that transaction processing comes the ability to exchange money. Out of that process comes this token, the Bitcoin token, the coin, that's a representation creation of value of the underlying system, but it's a complete transaction processing system. Like it's a new kind of financial system.
When people invent something, usually, even if they're shy, they might say, well, I did something nice. How come the inventor of Bitcoin hasn't surfaced publicly?
So this is one of the most amazing things I've ever seen in my life, which is, I would go a step further. Most people, when they invent something this profoundly breakthrough, they actually don't realize how important it is at the time they invent it. And whoever this person or person, thing, AI, government agency, whoever invented this thing, like they knew the importance of what it was from the very beginning, such that they knew it was important to basically hide their identity. And it's incredibly remarkable that they knew that up. It's like Babe Ruth calling a home run. It's just like amazing that they did that. And then it's doubly amazing that they've been able, whoever they are, they've been able to maintain the secret all this time.
That was Andreessen Horowitz, co-founder, of course, Mark Andreessen, speaking with David Rubenstein. You can catch the entire interview tonight on the latest episode of Bloomberg Wealth. Let's get a Bloomberg Business Flash, then, the top corporate stories we're covering this morning here on Bloomberg. Here's Laura.
Thanks, Anna. Bloomberg has learned the UK may block a takeover of chipmaker Arm by Nvidia and SoftBank. A report by UK regulator, the CMA, is currently being considered by ministers. Hedge fund Alphadyne Asset Management has become one of the biggest casualties from a short squeeze in the global bond market. Its $12 billion macro trading strategy snared in a series of bad bets on rising interest rates. The investment firm is said to be facing losses of around $1.5 billion after its hedge funds plunged during July. The company has never had a down year since it started in 2006. It's an attempt to phase out the use of the worst man-made contributors to climate change. Bloomberg's learned that BlackRock and other major financial institutions are working on plans to accelerate the closure of coal-fired power plants in Asia. Citigroup and HSBC are among the partners. Proposals call for buying plants, running them for up to 15 years, and then closing them ahead of current schedules. That's the Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London. Let's turn our attention to what's going on in China. And China is experiencing its broadest outbreak of the coronavirus since the beginning of the pandemic in late 2019. The outbreak is hampering tourism and spending during the peak summer holiday period. Let us talk to Tom Mackenzie, who was, of course, until very recently, our China market anchor, and who joins us now in London. Tom, very nice to see you, having served the necessary quarantines in various parts of the world. Yep. Very nice to see you here in London. So let's start with what's going on in China, where you've just come from. What is the latest state of play with this renewed push to clamp down?
Well, by the time I left, this had not taken place, so it's happened quite rapidly. You talked about the fact this is widespread. So 46 towns and cities across China now have tracked down people who have the virus. Most are Delta cases. You're talking 32 provinces. And the key part of this is that it is widespread. We are still only talking around 200 or so cases. Now, within the global context, of course, that sounds very small, but China has had this virus under control very strongly since around March, April of last year. So for China, this is a big deal. And the fact that it's spread to cities, including Beijing, where the measures are particularly restrictive because it's the capital, and of course, that is where Xi Jinping and his team sit, is notable. And because it's the Delta variant, of course. And there have been breakthrough cases. We know that the vaccination program in China has been very successful as well. Significant proportion of the population has been vaccinated, but with the Chinese vaccines, and there's question marks over the efficacy. So certainly this is drawing the focus of officials that they're trying to get their hands around this.
Yes, and the fact that, as you say, that it is widespread signals that there will be more cases probably to be found, and we'll keep tracking that because we know how seriously the Chinese authorities take this and what their response looks like. Given that we know how well the Chinese authorities respond and how seriously they take this, we also think then about what this will do to the Chinese economy, to the recovery we've seen so strong in China up to this point.
Absolutely. We know the consumer was already slightly tepid. Consumption has not gotten back to pre-pandemic levels. Consumers there are anxious. They're keeping their hands in their pockets to some extent. This will only exacerbate that and take it longer for China's all-important consumer to get back to full force. And we've seen measures put in place by officials around travel restrictions. You talked about the fact it's a very important travel season. The borders are closed. So you had seen prior to this a lot of business, a lot of momentum in the tourist sector. That now has been hit, of course. Flights have been impacted. You've got the likes of Nomura changing their forecasts for the third quarter GDP out of China. They've downgraded it from 6.2%, that was the original forecast by Nomura, to 5.1%. They are pointing to those economic risks. So we'll be looking to see if we hear anything from the PBOC or indeed other officials to see whether they're going to put in place measures to ease and try and support the economy, which is starting, of course, to come off those highs that we saw in the earlier part of the year.
Yeah, we heard a little bit over the weekend, didn't we, from the Politburo about what support was coming in the second half, and we will look to continue those conversations. Tom, thank you very much. Very good to have Tom McKenzie in the studio in London when we're covering this story. Plenty more from Tom as we go through the weeks ahead. Coming up on this programme, we discuss earnings season and the boost to European stocks. We'll get into that conversation next. We've had plenty of earnings coming through from Berlin and here in London. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European market open. 53 minutes into our European trading day this Wednesday morning. European equity markets making some gains this morning. We'll come back to the reasons for that in just a moment. We're just getting some data coming through from France. The French July services PMI number, 56.8. That is just a little below the preliminary number, if we're really splitting hairs, at 57. And I mentioned that because the Italy number showed a similar sort of theme. We also had a slightly lackluster number, but it is well above 50, and that's the important point when it comes to expansion versus contraction, of course. Let's think about where we are on the broader risk asset story. Heather Burke from our Markets Live team joins us now. Heather, good morning to you. So European equity markets then gaining on the front foot. Is it all the earnings story? Is that what we're really focused on here in Europe, and is that lifting us?
Good morning. Definitely earnings have played a big part in European stock gains over the past few weeks. We've overall had consistent signs that we're seeing an economic and profit recovery. And one thing that has really been a feature of this earnings season is a return of buybacks and dividends, particularly from miners and energy banks. and that has propelled some of those cyclical sectors back.
PMI number, so I'll just mention that 61.8. The prelim number was 62.2. So again, very much above 50. So very much in expansion territory, but coming in a little shy of some of the estimates. So we'll keep an eye on the euro, see if that takes the edge off. We're fairly flat, the 118.75 level right now. Heather, how are the latest concerns around China playing into markets? I mean, clearly not all that much today because we're higher for European equity markets. So putting aside what concerns around Chinese regulation and concerns now around the Delta variant and the spread of that.
The concerns about the China clampdown on tech and other industries have largely mostly played out in Asian equities. That being said, China and also the spread of the Delta are concerns that keep coming back for equity investors. And August we've seen some more volatility in the market, and August is traditionally weak for equities. So those are two things that could end up as big concerns this month that could quench the equity gains that we've seen lately.
Heather, thanks very much. Heather Burke, then from our Markets Live team, keeping her eyes on that earnings story for us, tracking that as it continues to have an impact on some of the businesses that we're talking to today. We certainly see Taylor Wimpey responding well to its earnings story. That stock up by 3.5%. As a result, we got a heads up on the Hugo Boss story early on. They also put out numbers. That stock up by 0.9%. On the other side, Commerce Bank down by 4.4%. That on the back of that miss on a number of levels, actually, and including on the revenue side of things. Legal & General moving to the upside after their earnings. So clearly earnings stories, earnings themes very much to the fore. That is it for the European Market Open show for this Wednesday morning. Surveillance Early Edition is up next. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
I assume you have a lot of people saying the food isn't as healthy as they might want it to be. Is that the biggest challenge, or just growing the company?
Ray Kroc had a famous line, if you're not green and growing, you're red and rotten.
For the people here on Earth who are wondering, why are we investing all this money in space, this time in space, talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
I think think there is some degree of acceptance now.
To pandemic preparedness and response at every level.
The key to NYC Pass will be a first-in-the-nation approach. It will require vaccination for workers and customers in indoor dining, in indoor fitness facilities, indoor entertainment facilities.
This is Bloomberg Surveillance, Early Edition.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Here's what's coming up on the day's program. Commerce Bank sticks to its revenue target despite earnings missing estimates. The lender's CFO tells us that they're making good progress on the restructuring plan. China sees its broadest COVID outbreak since the beginning of the pandemic. Analysts downgrade the GDP outlook for the world's second largest economy. And the ECB won't rush to signal the future of its bond buying program. A governing council member tells us that investors may be in for a disappointment if they expect a heads up in September. Well, good morning, everybody. We are seeing a bond market whose gravitational force is towards lower yields, especially in Germany after those headlines out of the ECB. You have an entirety of a bond curve that's now below zero, and you had Japanese 10-year yields dropping at 1 point below zero for the first time since September. A little bit weaker in your U.S. American equity future session, but in Europe, it is all about the record highs. It is about the earnings season as it continues to roll on. So let's get into that. European stocks at a record high as more than 50% of European companies have now reported earnings for the second quarter. But this morning has seen mixed results. We had big winners like UK home builder Taylor Wimpey to under pressure German lender Commerce Bank. Let's break down the equities now with our equity editor, Joe Easton. All right, so Joe, again, another busy morning. How would you kind of characterize the state of earnings so far of what we've seen from companies this morning?
Yeah, so as you mentioned, we've seen these big beats against analyst expectations, which kind of is positive, but it only goes so far, and seeing we know analysts tend to eventually bring expectations down in line with the economy. So we did see that during the big recession. Now we're beating those estimates. But importantly, what we're seeing is the margins are really strong mainly. So the margins are being not only beating expectations, but maintaining strong nominal margins against across most markets now. And also just on valuations, you know, although we are at those record highs that you mentioned, some sectors still do trade below pre-pandemic levels, like airlines, travel, even banks. So there is still room to go potentially.
Yeah, and of course, you know, those high margins are remarkable in a time when you have those inflationary concerns. Okay, you mentioned banks, so I want to go there. We had Commerce Bank this morning, share prices falling. I mean, are they just missing the mark and not stacking up against their peers? What's going on with Commerce Bank?
Well, so Commerce Bank has its own kind of issues that you did mention in the intro, with their own restructuring issues and that kind of thing. But in terms of what they're exposed to, they are exposed to the general themes that we've seen for banks this earnings season, that being fixed income really weak versus last year's boom, wealth management soft again, but companies are releasing these funds that they set aside for bad debts. We know that's better because the economic outlook has improved. And then on the retail side, we're seeing a rebound in credit card activity, but what we're not seeing is credit card balances coming back higher, and that's because people aren't going on holidays, which they usually put on credit cards. So then companies on the retail side aren't getting that big high interest retail income, and Commerce Bank is basically exposed to those broad trends.
Okay, so let's go from Germany to the UK. We had home builder Taylor Wimpey, a housing boom obviously helping them out, but is this peak? Is it going to get any better from here for them?
Yeah, so again, we go back to the margins. They're basically saying that housing prices are so strong because of this demand increase we saw in the UK, which was largely due to the stamp duty holiday. So house price is so strong that they're managing to stave off that kind of increase in raw material prices. The problem is that mortgage holiday has now come to an end, and there's worries that the demand then drops off. And that's why I think we saw Taylor Wimpey's shares quite weak into the earnings report, and now they've kind of rebounded on this margin news.
Okay, Joe, thank you so much. You're all over always all of the sectors. Such a pleasure to have you on to cover these earnings stories. That is our equities editor, Joe Easton, joining us. Thanks as always. Now, China's broadest COVID outbreak forces the government to cut travel. This prompts analysts to downgrade the nation's GDP outlook. We're going to discuss China and the future of the renminbi up next. This is Bloomberg.
if inflation did seem to be persistent, the Fed wouldn't hesitate to act, and that you have the tools to deal with inflation. What do you say to critics on Wall Street who say, yes, you have the tool to deal with inflation, you raise interest rates, and then historically plunge the economy into recession?
Yeah, that's exactly the kind of logic, I think, that you want to avoid, that you get too far out of alignment with what's actually happening in the economy, and then you really have to react more strongly than you'd like, and possibly causing disruption in the economy. So you don't want to be in that situation. I think the risk management here is that if inflation does come back down in 2022, we're in great position for that. We're exactly positioned for that. But if it doesn't, we're not in such great position. So I think for that reason, we want to have some flexibility on this taper.
Friday is Jobs Day.
For every positive thing you point to, there's something less positive.
The June report fell short of estimates.
The unemployment rate goes up to 5.9%. It's one of those things where you say it's good news. The unemployment rate goes up.
What should we expect to see from July's report?
A lot of reshuffling. We'll continue to see hiring at large pace.
Are people looking to return to the workforce?
Businesses have a lot of jobs to fill. They can't find workers.
The July jobs report, Friday on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Let's get over the Bloomberg for
near Iran. UK Maritime Trade Operations, which monitors commercial shipping routes, says boarders have left the vessel after its earlier reports of a potential hijack. Last week, a tanker was hit by a drone attack in roughly the same area, killing 2 crew members. Iran was blamed by the West. President Biden, along with other top Democrats, are calling on New York Governor Andrew Cuomo to resign after a state report found he sexually harassed multiple women and violated federal and state laws. State Attorney General Letitia James says Cuomo and his staff retaliated against at least one former employee for coming forward. Cuomo denies the accusations.
Are you now calling on him to resign?
Yes.
And if he doesn't resign, do you believe he should be impeached and removed from office?
Let's take one thing at a time here. I think he should resign.
More than 500 firefighters are reported to have worked through the night to contain a large forest blaze on the outskirts of Athens, forcing thousands to flee their homes. The fire was the worst of more than 80 that have broken out in the country over the past 24 hours. Greek officials say it's one of the worst heat waves of the past 40 years. Most kids who get COVID-19 recover within a week. That's the finding of a large UK study which followed 250,000 children. The researchers quoted in the Lancet Child and Adolescent Health said about 4.4% of children with symptomatic COVID experienced symptoms for longer than 4 weeks. Fatigue, headaches, and loss of smell were most common. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Danny.
Laura, thanks so much. Now let's move to China, where the broadest COVID-19 outbreak since the beginning of the pandemic hampers tourism and spending. At least 46 cities have advised their residents to refrain from traveling. As risks escalate, analysts have been prompt to review their economic growth forecast. One of them was Nomura. The Japanese bank has downgraded its GDP projections for the full year. It had its growth forecast.
Well, it's the spread of this virus, and it is largely the Delta variant as well that China is having to wrestle with. Prior to this, China had put in place a system that had really quite successfully controlled the spread of the virus. We've had a few clusters over the last 12 months, but they've been very quickly shut down. This one, though, has spread quite widely. You said 46 towns and cities have put restrictions on the movement of their people. It's now in more than half of China's 32 provinces. There are cases in Beijing and Shanghai. In Beijing, the restrictions have been very tight because, of course, it's the capital, it's where the government sits, and they've been very reluctant to see any virus there at all. So the fact that you've got cases there is significant. It is the Delta variant as well, and you've seen some breakthrough cases. The vaccination pace and rate in China has been quite successful, but it is, of course, using Sinopharm and Sinovac. The efficacy of those vaccines has been questioned. You talked about the fact that cultural sites, tourism sites have been impacted. Many have been closed down. Airlines as well have seen lots of cancellations of flights at an important time for travel and tourism in the country. So as you say, that's feeding into these question marks about the future pace of growth for the country.
Right. And of course, for a lot of these businesses, it's the unknown that is really painful. When can you reopen? When can you travel again? Is there any signaling or any sort of read across of when that lockdown could end?
There hasn't been any statement from officials that clarify how long these restrictions will be in place. We've never had that in the past, but you can look back at recent history in China and draw some conclusions, which is that they're not going to probably lift these restrictions until they feel very confident that they have a grip on this outbreak, particularly in those main cities of Beijing and Shanghai. It originated in a tourist hotspot, and you had a lot of tourists who were visiting, and they fanned out across the country. So it would seem unlikely that these restrictions are going to be lifted anytime soon.
And Tom, you mentioned the vaccines. What does it look like in China right now? What does the vaccination rate look like? Are they picking up the campaign, especially as Delta spreads throughout the country?
Yeah, it made a slow start, the vaccination scheme and process in China, but they really picked it up. You have quite a significant level of vaccination rates. It will now be accelerating even further on the back of this. Anyone who was reluctant will be coming out, you would have thought, and getting those jabs. But again, there have been question marks around the efficacy of both Sinovac and Sinopharm, which are the main vaccines that have been rolled out in China. The rates vary from 50 to 60% in terms of efficacy. In terms of the extent, again, the efficacy and the fact that there have been a number of breakthrough cases will be causing officials their concern.
Okay, so what does this all mean for the economy? How big of a hit will it likely take?
Well, you touched on Nomura. They have, as you rightly said, downgraded their forecast for full-year GDP. They had a forecast of 8.9%. They've cut that down to 8.2%. You've got Bloomberg Economics, NatWest as well, saying that there are headwinds to their forecast for growth. Goldman Sachs saying you could be seeing in the third quarter reduction in terms of growth for the third quarter GDP of about 0.7%. They have not downgraded Goldman their forecast. They'd say there's too much uncertainty, as you pointed to, around the restrictions, when they're going to be removed, and also, of course, crucially, that policy response.
Yeah, exactly. Let's get into that policy response, because there had been some noise around the triple R cut. Yep. How accommodative is the PBOC likely to be as these uncertainties continue to rear their head?
Well, there are now more economists looking for an additional triple R cut. There was a bit of a mixed view as to whether or not you were going to get another one that followed up prior to this spread of this Delta variant across the country. I would have thought now you're going to get more economists coming out and saying another triple R by the end of this year is now likely. The PBOC has said it's going to ensure that there's adequate liquidity, that it will continue to support the economy. And of course, on another range of data points, you can see that the recovery in China is starting to slow. You've seen that in the PMI data. You're seeing concerns about exports as well, investment in things like infrastructure and property. So you would expect that the PBOC will respond in some kind. You had the Politburo coming out as well recently saying they would continue to monitor the progress in the economy and make sure that there is support there.
Right, a lot of factors to dig through. Tom, thanks so much for joining us this morning. That's our Bloomberg's Tom McKenzie. Let's get more into the currency picture as well, what this all means for the renminbi. We're joined now by Stephanie Holtz, Chief Currency Strategist at DWS. So Stephanie, first off, thanks so much for joining us this morning. Considering some of the growth concerns that Tom was just highlighting for us, you have Nomura and Goldman Sachs cutting their expectations for GDP in China. Should we see more weakness come from the Chinese yuan?
Right, Danny, I totally share all the concerns that Thomas just mentioned and that the market is digesting at the moment. And there should be some impact on the renminbi going down the line, absolutely. There's especially three factors that worry me the most. It's really not just a tech crackdown in China, it's now taken a new dimension, and it's very difficult to see where this will stop, when this will stop, how this will stop. We're now going into really much more of a social component, and the spillover effects into global growth, given that we now have much higher growth concerns in China, an element. And whilst the PBOC will have definitely an interest to keep the renminbi as stable as possible, most probably there can be some downward trajectory for the renminbi that needs to be managed from their perspective. Absolutely.
So you mentioned the tech crackdown and this adding to the growth concerns. People who argue that this is a micro topic, this only affects China locally, there's no transmission mechanism for it to have a more global effect. What are they getting wrong?
Yeah, it's actually an angle that I do not share. I worry a little bit more. I don't see this as an isolated topic. On the tech crackdown especially, I would say we would have to be aware that this is not an isolated China topic. You know, just 2 days ago, the BIS, they have published a bulletin talking about how important it is, and it's called Regulating Big Techs and Finance, how important and with which urgency the central banks really need to act and limit the impact that big tech can take in financial services and monetary policy. So it's a topic that we will see absolutely spilling over too, and it will impact the global risk assessment as much as the growth concerns from China will impact global growth concerns too.
Right, so definitely a global story. Stephanie, you're going to stick with us. We have more to dig through. That's Stephanie Holtz-Jen from DWS. Now, coming up, no rush. The ECB's Martins Kazak says the central bank won't rush to signal the future of PEP. We'll discuss next. This is Bloomberg.
What seems to be a really tough situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, the ECB will not rush to signal the future of its pandemic program. That's the latest word from the Latvian Governing Council member Martins Kazaks. With nearly 600 billion euros left to spend and the program running at least through the end of March, he says it would be too early for a decision on whether to extend or phase out purchases. Stephanie Holtz-Jen from DWS is still with us. Stephanie, this divergence we're seeing between a more dovish ECB and a Fed, is that fully priced into the euro at the moment?
I'd say it's not fully priced in, but of course the divergence between the central banks of Europe and the US is also only one factor impacting euro-dollar. But what is for sure, I think the ECB has made clear, it's cemented its very dovish stance. What we are a bit more puzzled about and need to monitor very carefully, of course, is the US side of things. We just had Fed Governor Christopher Waller talking about maybe a couple of unemployment reports looking better, and then you can look at tapering earlier rather than later.
Right.
So these are obviously things that carry us this week as we get the ADP numbers today and non-farm payrolls on Friday.
Right, exactly.
This is something.
Stephanie, on that point, on the jobs numbers, so if we have data obviously today and tomorrow, could we see more volatility around the dollar if they are to gain in importance, if Waller is flagging these job numbers as something that potentially changes the taper timeline for him?
Absolutely. I say we are now getting much more used to data volatility and the non-farm payrolls numbers as much as inflation or the inflation components that we're getting today as well are now inducing a lot of volatility. This is something we need to be aware of. And given that euro-dollar has been trading in quite a narrow range for quite a while, it'd be interesting whether we can test the resolve to either side.
Okay, and where is the bias currently? Is it a stronger greenback or a weaker one?
Well, to me, I see euro-dollar on the very short term having the capability of bouncing back towards the 120 level. But on the medium and longer term horizon, I say the growth gap is obviously widening still towards the US. And thirdly, the US dollar is also still displaying its characteristics as a haven when it comes to bigger risk-off events. And we just discussed how the risk backdrop is changing at the moment and has changed also over the past, given the health outlook, etc.
Stephanie, if we can get some more into those risks, geopolitics seems to be at the fore again. You had the British Navy reporting a possible hijacking in the Gulf between the UAE and Iran. You had a deadly drone attack that the UK, US, and Israel blamed Iran for. Is this something that should drive more traders into haven currencies?
Most probably it is driving some of the traders already in haven currencies. We have been seeing quite a move in the Swiss franc as well. So I would say not that these are only these geopolitical events that are the main drivers behind, but they play part and parcel in a changing health outlook, and also I think in a repricing of the reflation trade that has already started, and the FX world is seeing its part.
Right. And Stephanie, really quickly here, just 30 seconds, Delta variant spread, will that only fuel the drive towards havens?
I think so. It's also something that may not be as prominent as a topic in portfolio allocations right now, but I think it will become more so given we're coming out of the summer holiday part where Delta will spread even more, and the impacts will only be seen in the future, not right now.
Right. Stephanie, great catching up with you this morning. That's our Stephanie Holtz-Jen, Chief Currency Strategist at DWS. Thanks again for joining us this morning. Now, coming up, we get more into the earnings season. Commerce Bank's second quarter earnings miss estimates. We'll dig into European bank earnings next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Bank sticks to its revenue target despite earnings missing estimates. The lender's CFO tells us that they're making good progress on the restructuring plan. China sees its broadest COVID outbreak since the beginning of the pandemic. Analysts downgrade the GDP outlook for the world's second largest economy. And the ECB won't rush to signal the future of its bond buying program. A governing council member tells Bloomberg that investors may be in for disappointment if they expect a heads up in September. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, where it's just heading up to 9:30 a.m. Now let's stick with that earnings story where Commerce Bank's revenue fell 18% from last year and net income slumped to a loss of 527 million euros. But the German lender reiterated a forecast for revenue to increase slightly this year as deep cost cuts and corporate restructuring takes effect. We spoke to Commerce Bank CFO earlier.
Well, first of all, we said that Q1 was exceptionally good from the revenue side. And if you now take the second quarter and you need to compare it to what we said, is basically that the net commission income is 7% up year on year. Very important and also very promising for the next months. NII, we said we would stabilize quarter by quarter, and we did. So overall, we think that we will definitely continue this trend in the next 6 months, and therefore we stick to our guidance that revenues this year will be slightly above last year's revenues, and nothing has changed on that.
Good morning, Bettina. It feels to me that Commerzbank has been doing new cost-cutting initiatives and talking about reducing headcount for so many years. It was a dominant theme when I worked at the bank almost a decade ago. I'm curious about, how bloated you think the bank still is. I understand it takes time for these headcount reductions, particularly in Germany, given the strength of the labour unions, and I know you've made progress in that this year. But is this going to be an ongoing theme for many years to come, or do you think we're nearly at the end of this cycle of job cuts?
Well, I mean, in times of digitization and ongoing technology, it's I think a difficult thing to judge because that is not only true for banking, but it's also true for other industries that you have always changes in the business model, and I think continuous improvement will be something which will be there all the time. But I mean, the big restructuring is now up, and we're making, as you said, very good progress. I mean, we announced the 10,000 FTE reduction until 2024. We are basically, I mean, we have concluded the general agreements with Workers' Council beginning of May already. We are now halfway through the detailed negotiations, so 50% is basically done. We have signed already with more than 3,000 employees a contract, and we have launched a voluntary program for people to leave until the end of this year, about 1,700 FTEs, and it looks good. So I'm pretty confident that at the end of the year, we will look on something where we have basically closed agreements with more than 5,000 FTEs. So good progress on this side.
Bettina, you have a good sense, a good take on the German economy, and in particular the Mittelstand and those sort of mid-size businesses. Do you think we've seen the peak in German corporate defaults? As you look at the recovery of the German economy, what are you seeing in your numbers? I see that you put out in your statement today, you say full-year loan loss provisions will come in lower than 1 billion euros. What are you seeing then in that provisioning?
Definitely improved the guidance based now also on the second quarter. And if you look on the second quarter, just for corporate clients, we even didn't see anything, to say it like that. We say still cautious. This is why we say less a billion. If you now look on the first half, we just booked 235 million. So we still have a lot of buffer for the rest of the year. Specifically, if you take into account that we have our extra buffer, the top level adjustment of 495 million, which we kept untouched. So we still stay cautious. I mean, Mittelstand is holding up very nicely. Also, our revenues on Mittelstand are 3% up year on year. We, however, still see that activity is not as high as we probably wish with respect to investment activities. Therefore, you see that also the Mittelstand stays pretty cautious. I mean, we now have the Delta variant, we have the Lambda variant, and hopefully we will come through the next months without further lockdowns, etc. And then I think we can be much more optimistic. In the moment, we still stay cautious, and this is why we kept the buffers as we have. But I think hopefully there will be quite some upside until the end of the year.
That was Commerzbank CFO Bettina Orlopp speaking to Bloomberg earlier. And as the worst of the pandemic is left behind, European banks do face a brighter outlook. Earnings results show banks paying back debt provisions, and the cash taps are set to reopen to investors, with the ECB lifting a cap on dividends and buybacks come September. Let's get more into the European banking story. We're joined now by Magdalena Stoklosa, head of European Bank Research at Morgan Stanley. So Magdalena, we've basically made it through the bulk of European bank earnings. Has your outlook for the sector materially changed from where you saw it before the results started to roll in?
Good morning, Danny. Yes, I have to say that the earnings season so far, as you've mentioned, has been strong. And of course, you know, when I look at the banks, 85% of banks that reported so far effectively beat on a pre-tax level by an average of 30%. Of course, we can argue, you know, a lot of it is provisions, but even on the operating level, the banks effectively kind of beat the street by about 7%. So I do believe that after this quarter, the earnings forecasts are going to go up. If I look at our own forecasts, we've kind of gone up by about 5% for 2021 already for the banks that have reported on average. So yes, I think the earnings outlook continues improving, particularly for 2021.
Yeah. So one of the things I think, to your point, that really struck me was equity trading at all of these banks. For example, Deutsche Bank, SocGen, banks that had been kind of gravitating away from their trading desks, turning out really strong numbers. Does this at all change the calculation for these banks that weren't really looking to get any support from trading?
So I have to say that I believe that trading structurally actually has more support post the pandemic as well. Because when we kind of look at the big themes, we've got deepening of the kind of equity markets, deepening of kind of corporate debt markets as well in Europe. So I do believe that in general, we're going to see the trading income levels actually higher than what we have seen pre-crisis. You know, nothing like, of course, the excesses of 2020, but higher than what we've seen pre-crisis. So yes, I think in general, I do believe that equity business and to a degree also corporate debt business are facing quite a kind of nice structural future here.
Okay. And yeah, I mean, along the same lines, we saw fee generation come in really strong. Obviously, it's been a really busy period when it comes to deals. Do we know if the European banks have been able to take some market share back from the U.S., or is the pie just kind of growing bigger?
So interestingly, yes. I mean, these are kind of small market share moves, but we have actually seen European banks kind of claiming a little bit more of a market share actually in equities that we have just kind of talked about, so equity trading, and a little bit in banking as well. I think, you know, those things move around a lot on a quarterly basis, but I think that the European banks are holding their own.
Okay. I also, Magdalena, I have to ask you, so overnight we learned that Lazard is the latest bank to be bumping up junior pay, $100,000, basically in line with a lot of the other banks. At this point, is it kind of just like you have to have a base salary for first-year bankers at that level in order to just be competitive, or can these banks really entice people into their specific firm with a higher level of pay?
So I have to say, I treat this very much as an industry dynamics. I think we are, there's parts of the investment banking that are growing very, very strongly, and of course, banking is a part of it. And I do believe that a part of that growth is structural. We're going to see kind of more of it as we go into 22, 23, and I think that if a part of the market kind of raises the basic kind of rates, it's very difficult, to not to follow. So I do believe we're in a competitive space, and I do believe that given how many of the banks have raised over the last months, pretty much, I think that's a sign of just how competitive banking has become and how good of a pipeline there is.
Yeah. I mean, do we also have any read-through on kind of the hybrid working space? It feels like European banks, just for cultural reasons, have allowed more of that than their U.S. counterpoints. But is that continually the push that we're seeing a lot of the banks move towards? When I kind of look at various banks and various announcements over, let's just say, the last couple of months, I have to say I think they softened on both sides of Atlantic. To be fair, I think we have to be very mindful that the hybrid way of working is the future. It's just a question of where you're going to settle, and I think that's what we're going to kind of see in practice over the next 6 months, as of course other restrictions, more national restrictions, are lifted. Right. Magdalena, so great to catch up with you this morning. That's Magdalena Stock-Klosa, Head of European Banks Research at Morgan Stanley. Thanks again for joining us this morning. I quickly want to give you some lines crossing on the UK economy. The UK services PMI coming in much stronger than the flash reading. The preliminary reading had been 57.8, coming in at 59.6. So that is certainly better than what we had been expecting. Of course, we had Freedom Day in the UK. The hope is that the economy starting to normalize here. Now, coming up, a short squeeze in the global bond market snares a big casualty. More on the $1.5 billion loss faced by hedge fund Alphadyne. This is Bloomberg.
Exceptional Q2. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Let's get to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Danny. Bloomberg has learned the UK may block a takeover of chipmaker ARM by NVIDIA, citing potential risks to national security. NVIDIA is the biggest US chip company by market value. Last September, it announced a $40 billion deal to acquire ARM from Japan's SoftBank. A report by UK regulator, the CMA, is currently being considered by ministers. SoftBank is said to have quietly built a $5 billion stake in pharmaceutical giant Roche and is betting on its strategy of using data to develop drugs. A source tells us SoftBank sees Roche's data-based drug discovery and development arm as undervalued. Bloomberg data shows the Japanese conglomerate is now one of Roche's largest investors as it continues its investments in biotech and healthcare. That's the Bloomberg Business Flash. Danny.
Laura, thank you so much, Laura, right here in London. Now let's turn to the hedge fund world, where Alpha-Dyne Asset Management is one of the biggest casualties from a short squeeze in the global bond market. Sources tell Bloomberg that the investment firm is staring down losses of about $1.5 billion after its hedge fund bet on higher rates and a steeper U.S. yield curve. Let's get more from our Bloomberg hedge fund reporter, Nishant Kumar. So Nishant, talking about some of what caused them to see that $1.5 billion loss, how much do we know just about how wrong-footed their positioning was?
I mean, it's basically boils down to what happened in the bond market in the first half. First, macro investors had amazing trouble navigating the market twists and turns. The benchmark 10-year yield on U.S. Treasury, as we know, unexpectedly jumped 83 basis points in first quarter, only to reverse direction in the second quarter. And that caught a lot of hedge funds, especially macro hedge funds. Alpha-Dyne is one of the biggest losers, as we know, so far, in that epic turnaround or epic collapse in the market.
Yeah, I mean, Nishant, in terms of Alpha-Dyne itself, I mean, this is a fund that's not really known to lose money very frequently, are they?
We can safely call them the steadiest or one of the steadiest hedge funds in the world. Since they're starting in 2006, they have never had a down year. The most stunning statistics here is that the maximum this fund has lost ever in a month was 4.3%, and that was in June. It lost money on directional and relative value strategies in US, UK, European debt market. US stiffeners and short duration positions hurt it the most. And as we know, the yield curve from 5 to 30 years just flattened by more than 25 basis points in a span of 3 days. So if you are positioned incorrectly, and if you are caught by that, obviously you will suffer this kind of loss. But in Alpha-Dyne's context, this is something that is very unheard of, really.
Well, you did point out, Nishant, that this is something that a lot of macro hedge funds struggled with this year. What has that done to investor appetite in macro hedge funds more generally?
So macro hedge funds are at a very interesting phase. Just 6 months back, they had an amazing year. Some of the biggest names in the industry, such as Brevan Howard, Chris Rocco's, they had record year of profits. Caxton made 40% plus. And all of a sudden, we are seeing this reversal with macro hedge funds on the wrong side of the trade. And that has kind of shaken the confidence a little bit of investors. If we measure that by inflows into the industry, inflows have turned flat to small negative, primarily because investors just pulled roughly $6 billion in June. Right. So we will see, what happens to the returns. The environment it feels like this is a good environment for macro hedge funds to make money. So, but it all depends on the next few months.
Right. Well, Nishant, we'll certainly keep an eye on that with you. A fantastic scoop. That's our Bloomberg's Nishant Kumar. Thanks again. Now, coming up, the spread of the Delta variant means the new level of herd immunity could be higher than 80% of the population. We'll talk next with our Bloomberg Intelligence Head of Pharma, Sam Fazeli. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Demand for transatlantic flying has significantly increased. So while the US is closed under the 2&2F to Europe and UK, US citizens can travel freely. I'm actually quite glad that the EU and the UK has opened up and hasn't demanded that the US reciprocate. I think that will take a little bit of time, but I do believe that we will get there. We expect business travel to recover, but to lag the recovery in leisure travel. I think there is some degree of acceptance now that business travel may not recover to the same levels as 2019, but I don't think it will be as impacted as some people believe as a result of technology.
That was IATA Director General Willie Walsh on the return to international travel. But the Delta variant could throw a spanner in the works. Its spread has pushed the threshold for herd immunity to possibly well over 80%. According to the Infectious Disease Society of America, the number could be as high as 90%. This is as China is seeing its worst outbreak since the beginning of the pandemic, and at least 46 cities have advised residents to refrain from traveling. Joining us now to discuss is Bloomberg senior pharmaceutical analyst Sam Fazeli. So, Sam, this study about possibly a higher level of herd immunity needed, do we have the hard numbers to back that up, or is this very anecdotal at this point that maybe it'll be 80% or 90% for herd immunity?
Yeah, hi, Danny. I don't think I've seen any hardcore publication of data or analysis. So, and honestly, calculating herd immunity levels, required herd immunity levels, etc., are pretty complicated and very difficult, and it will be dependent on the community, etc. So, but I'm completely understand why the Infectious Disease Society in the US has said this, simply based on the characteristics of the Delta variant and compared to what we had before.
There does seem to be this sort of rethink of what we know about vaccines, herd immunity, given the Delta variant and how much it spread. Certainly, anecdotally, Sam, I know a lot of people who've been fully vaccinated still tested positive, still got COVID, and presumably it's with the Delta variant. Researchers in England saying, okay, maybe you need another shot to target the Delta variant. How much do we know about that at this point?
Yeah, so the complication here, of course, isn't that anybody thought that vaccines were 100% effective against blocking all infection, which we knew they weren't. What they were aimed at was to try and reduce as much transmission as possible, and at the same time significantly reduce severe disease, which is exactly what's happened. So what we do know, though, is that the Delta variant is more capable of breaking through that initial shield that to infect you and taking a foothold, but still the vaccines protect you significantly from severe disease. So everything's working as expected. But if we continue to want to see a reduction in the number of infections, then we would need a booster. And I suppose once you're doing that, you might as well do it with the Delta variant booster.
Right. Sam, thanks so much, as always, for staying on top of this for us. That's our Sam Fazeli of Bloomberg Intelligence. Now let's get a quick check on your markets as we head into the end of the hour. We are continuing to see lower yields when it comes to German bonds and Japanese bonds as well. At one point, we had Japanese bonds below zero, the first time since December rather, but we are seeing the entirety of the German yield curve below zero. And so that certainly is pushing us towards the bond rally in the US as well. Basically unchanged when it comes to your American equity futures, while European stocks up 0.5%, trading at all-time records as we continue through this earnings season. And the conversation continues with Bloomberg Surveillance Early Edition in the next hour. Matt Miller joins me out of New York alongside Kaylee Lyons. That's next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
There will be a broad, comprehensive approach to pandemic preparedness and response at every level.
The COVID crisis was, and to the extent that it is ongoing, is a matter of dealing with both the health and the intertwined economics here.
Experts tell us that we're going to see these cases rise in the weeks ahead, a largely preventable tragedy that will get worse before it gets better.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, August 4th. Our top stories today: risky business. The CDC extends a moratorium on evictions because of the pandemic, but President Biden warns the move may face legal challenges. High drama on the high seas. A possible ship hijacking near Iran ends when boarders leave the vessel. The question is, who was responsible? Squeeze play. Hedge fund Alphadyne loses $1.5 billion from a short squeeze in the global bond market. I'm Danny Berger in London with Matt Miller and Kaylee Lines alongside me in New York. Francine Lacqua is off this week. Kaylee, certainly a more constructive handoff from Asian markets today. Here in Europe, it meant we could chart to all-time highs.
Yeah, a lot of green across the screen, at least in Asia and in Europe, Danny. In Asia, I would note one exception to that was the Nikkei in Japan. It did close in the red. One of the big drags within the index was SoftBank as well as Sony. But we saw stocks higher in China and Hong Kong, and the Hang Seng Tech Index up more than 2%. The People's Daily out of China seems kind of a mouthpiece for the opinions of the Communist Party, still criticizing video games, but doing it with a softer tone than we saw in reports yesterday. So that gave a nice lift to the Hang Seng Tech Index, specifically Tencent, which did rise in the session after falling about 6% yesterday. It closed higher by about 2.4%. In other asset classes, I would point to the Japanese bond market because the 10-year GGB yield actually fell to 0 for the first time since December. That is reflecting a lot of concern about the Delta variant and what it's going to mean for the economic recovery. And your big outperformer in foreign exchange, at least in the G10 space, is the Kiwi. The New Zealand dollar is stronger against the US dollar by about 0.7% after a strong jobs report, and that's leaving traders to think a rate hike could be coming 2 weeks from now. As for what the picture looks like here in the U.S., honestly, not a lot of movement across asset classes. When it comes to the futures market, we're down, but not even 0.1% on S&P E-minis, only down about 3.5 points. And we're nowhere in the Treasury market. The U.S. 10-year yield still sitting at 1.18%. The dollar essentially flat. It was weaker earlier, now just a touch stronger on the day. Crude also flat. Still, though, just a touch lower, down for a third day. Matt, we're trading right around $70.52 a barrel.
All right, watching oil then, not doing a lot. I should mention Volkswagen just came out saying that its finance arm is going to reach a profit 4 years earlier than expected because used car prices have gone up so much. So just touching base with Volkswagen right here in Wolfsburg, where I normally live near there. You can see that we have kind of a mixed picture here because the DAX is gaining 0.6%. The CAC is up, the FTSE is up, the FTSE MIB is up, but we're looking at losses here in Spain. So kind of a mixed picture in terms of what's going on in Europe. If you take a look at some of the individual movers, you'll see German stocks there as well. Notably, Commerzbank, it's the biggest loser, down 5% on the Stock 600, the broader European benchmark, because it missed on the top line, it missed on the bottom line, some expenses that were unexpected, and that hurts Germany's second largest bank. I also noticed just a few minutes ago a dollar spike, which resulted in a euro drop. We saw a Swissy drop as well. The pound coming down a little bit, but the euro, the biggest mover there, 118.51, and you can see German bunds barely changed, but still at negative 49 basis points, Danny. So there's a lot going on, but it's not all necessarily moving markets. There's deals with Apollo, CVC, and La Liga, a new SPAC from Betsy Cohen, a SPAC deal, I should say. So a lot going on in the world of M&A.
Yeah, there's just so much money around there, Matt, floating for a home. And I should say, to tie in that with your Commerce Bank story, we are seeing more money flow to the junior bankers. Lazard, the latest bank to announce they're paying their junior bankers $100,000. I feel like now we should have a list of who's not paying their bankers more, Matt.
Yeah, definitely. And, you know, it's all the same except for Goldman Sachs. They're paying more at 110, which I always love Matt Levine's column saying they're looking for mercenaries now if they're going to pay that much.
NI Levine on your terminal, always the place to go every day. Now let's take a look at what's ahead. At 8:15 a.m. New York time, we're going to get U.S. ADP unemployment change for the month of July. Then at 10 a.m., Fed Vice Chair Richard Clarida delivers a speech on U.S. monetary policy. That's going to be at a virtual event hosted by the Peterson Institute. We'll get the EIA crude oil inventory report, and that's at 10:30 a.m. We've seen a little bit of crude weakness over growth concerns. And then the earnings season bonanza continues on. We have General Motors and Uber among the companies releasing second quarter earnings today. Now let's turn to geopolitics, where the British Navy said a ship was safe after a possible hijacking near Iran raised friction in the region. The incident comes days after the U.S., UK, and Israel blamed the Islamic Republic for a deadly drone attack on an Israeli-linked tanker. Let's get more on this with Bloomberg's Yusuf Gamal El-Din in Dubai. So, Yusuf, this incident, perhaps a false alarm, but how extensive have geopolitical tensions risen in the region?
Yeah, well, look, it might be a little bit too early to express any sigh of relief because, yes, sure, the UK Maritime Trade Operations, the agency that monitors these commercial shipping lanes, they've come out with a report and said the boarders have left the vessel, but that's all they said. We've tried to reach out to the ship that is a Panama-flagged boat to try and confirm any of these reports, but no confirmation so far. This happened roughly halfway between Iran and the United Arab Emirates. The Iranians have described their alleged involvement here as rumors and the fake news of Western and Zionist media. And it comes after that tanker attack that killed a Romanian and a Briton. Washington, we understand, is moving forces into the region to investigate that attack. That's according to the Financial Times. And when I try and look for repricing of risk, I look to the Saudi Arabian Riyal forwards on a 12-month basis. That is a bet against the local currency there. You know, that's risen on 10 basis points just this morning in terms of that spread. The background is a new Iranian president as well that's just taken office in the last 24 hours. And that brings with it a whole new set of considerations, guys.
Well, we also usually see geopolitical risk in the Middle East playing out in the oil market. What's the read-through there, Yusuf?
Yeah, just limited, very, very limited. The reality is that these concerns and the anxiety around the impact of the Delta variant on a very nascent demand recovery, that's very real. And so what you're getting here, for example, on your Brent contract at just about 1/5% higher, the RBC guys are saying that the Iranian supreme leader may be betting that a policy of brinkmanship may yield more concessions. And you have 1 million barrels a day that are at stake from Iran. Remember, their gradual return to the energy markets was something that we've discussed for a very, very long time. Yep. And now that's no longer as clear-cut.
Got it. Yusuf, thanks so much. Bloomberg's Yusuf Gamal El-Din on the Iranian incident. Now, hedge fund Alphadyne Asset Management is one of the biggest casualties from a short squeeze in the global bond market. Sources tell Bloomberg the investment firm is staring down losses of about $1.5 billion after its funds plunged through July. Let's get more on this with Bloomberg's hedge fund reporter, Nishant Kumar. So, Nishant, what caused these losses? Just bad positioning?
Essentially, yes. So what happened in the first half is that the reflation trade that a lot of macro hedge funds were betting on, went bust, basically. So most of Alphadyne's losses came in the second quarter of this year, when fixed income instruments abruptly reversed direction. Declining yields along with flattening curves were really the most costly for Alphadyne, and right. it had a lot of exposure to those instruments. and it was slow to react to changing market conditions, and it lost, we estimate, according to sources, $1.5 billion.
Right, and Nishant, Alphadyne, not exactly a fund known to lose money, are they?
Not at all. They are one of the, or probably the steadiest macro hedge funds in the world. Just one statistics is enough to illustrate their steadiness. The maximum that they have lost in a month is 4.3%, and that happened in June. Since starting in 2006, they have never, ever lost money in a year. So it's quite odd for a firm like that.
All right, Nishant, thanks so much for joining us. Bloomberg's hedge fund reporter Nishant Kumar talking about one of the big stories in funds today. Now, the CDC has extended a ban here in the U.S. on evictions in 80% of counties across the country with high transmission of coronavirus. But President Biden warns that the new ban may face legal challenges and may be found to be unconstitutional.
Any call for a moratorium based on the Supreme Court recent decision is likely to face obstacles. I've indicated to the CDC I'd like them to look at other alternatives than the one that is in power in existence, which the court has declared they're not going to allow to continue.
Let's get to our Bloomberg Washington correspondent, Anne-Marie Hordern from the D.C. Bureau. So, Anne-Marie, he's basically saying this is likely to be found unconstitutional, but it's worth a try anyway.
It's exactly what he's saying, Matt. And what a U-turn we are seeing, given the fact that just 24 hours ago, we were talking about the fact that the White House, the CDC, did not have legal authority to do this, and they were punting it to Congress. Congress couldn't muster up the votes. So now the president saying he's talking to legal scholars, and many said it's worth a try. The one thing the administration does seem to be doing in terms of this strategy to try to avoid these evictions of potentially millions of people is to, at least by doing this alongside the CDC, and it's a new moratorium. It's to more targeted areas, 80% of counties where you see high spikes of the Delta variant. They're trying to buy time, Matt, to get that $47 billion of that relief that was allocated to state and local authorities to go to renters out the door. And through the legal challenges, at least they say could buy them some time.
Anne-Marie, the focus here in New York, where Matt and I are, is on Governor Andrew Cuomo and, of course, Attorney General Letitia James, finding that he broke state and federal laws by sexually harassing multiple women. He seems to have no one coming to his defense in the Democratic Party, including the White House and President Biden now calling for him to resign.
Not a single Democrat comes to mind that yesterday came out and stood with this once really highly regarded governor, especially when you look at where his poll ratings were last year during the height of the pandemic, 77%. Now he's below 50% on that. And the head of the Democratic Party, a.k.a. the President of the United States yesterday, calling for his resignation. Now, you remember Biden in March sitting down with George Stephanopoulos of ABC saying that if this report said that he did this, then he should resign. And Biden did not back down on that yesterday. You have a number of governors of border states with a joint statement yesterday, New Jersey, Rhode Island, all Pennsylvania saying he should resign. Now it really comes down to, one, what are the next steps in terms of criminal and civil suits? And also there is already the New York State Assembly moving expeditiously, the Speaker of the Assembly says, in terms of an impeachment hearing on the governor.
Still an unfolding story. Anne-Marie Hordern, Bloomberg Washington correspondent, thank you so much. And later today on Balance of Power, don't miss a conversation with Senator Elizabeth Warren, the Democrat from Massachusetts. That's at 12 p.m. in New York, 5 p.m. in London. Back to the markets now. I want to take a quick check on some stocks moving in pre-market trading here in the U.S. And I have to begin with Robinhood. Of course, it just made its public debut last week. Didn't go so well. And then yesterday, it surged 24%, topping its IPO price for the first time on really heavy volume. And once again, it is the highest volume we're seeing in pre-market trading. Shares up another 7.5%. Another stock moving to the upside is Activision Blizzard. It, of course, is dealing with some controversy around its labor policies, but that being outshined by earnings that beat expectations and strong guidance for the video game maker. It's up 5.3%. And finally, also have to note Lyft moving to the upside. The big news is it made profit, an adjusted profit for the first time. This company has been losing money since it was founded, but finally gaining profitability in the second quarter thanks to a rebound in ride-hailing demand. That is up 1%, and we'll see if Uber can show the same thing with results after the bell today, Danny.
Who's setting the bar high. Will be interesting to see who wins the battle of the ride lifts. Kaylee, thanks so much. Now, coming up next, we have Paul Donovan, UBS Global Chief Economist, and later we have Philippe Hochois, Jefferies U.S. and European Autos Analyst. This is Bloomberg.
What you said was we need to make them in America. Does that include overseas companies making them if they have the plant in America?
I would certainly be in favor of them having operations in America, absolutely. You know, Samsung, TSMC, there are companies that are in allied countries, and you know, we certainly want them operating in America and producing chips in this country, yes.
So we have a significant chip issue, but there are other supply chain issues as well. As I know you're monitoring what's going on. Where have you seen other problems in the supply chains right now in the United States that need to be addressed?
Particularly in home building supplies, you know, lumber and all the related supplies, glue, adhesives. And you see it playing out. You know, home prices are high. If you go to Home Depot or Lowe's, you'll see prices are a little bit high. So, and that's all because of the lack of supply, just disruption.
I assume you have a lot of people saying the food isn't as healthy as they might want it to be. Is that the biggest challenge, or just growing the company?
Ray Kroc had a famous line, if you're not green and growing, you're red and rotten.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Danny Berger in London. Francine Lacroix is off this week. I saw this chart. Actually, Kaylee and I both noticed this on the Taking Stock column. Danny may have seen it as well, for all I know. But it just shows that the forward blended EPS for the UK, and I'll welcome our listeners on London DAB as I do every day at this hour. The forward blended EPS for the UK has continued its recovery and now is back at levels, pre-pandemic levels last seen at the beginning of March in 2020. So it looks like, at least in terms of company earnings, the recovery is complete. The FTSE, however, which is the white line on this chart, is still trading at a 7% discount to where it was before the pandemic. So it looks like the economy, at least in terms of companies' earnings, has recovered, but the stock market isn't quite there yet. Joining us now is Paul Donovan, Global Chief Economist at UBS. And you know, just want to get your take on where the economy is in the UK and why investors haven't ascribed the same value to stocks as we see in EPS.
Well, I think the story in the UK is that the substance is actually pretty good. The spin, however, is not quite so good. So the UK economy is faring pretty well. Restrictions are easing. The UK consumer is spending some of the savings that they were forced to accumulate in 2020. We didn't want to save money. We were forced to save this money, and there's obviously therefore a strong incentive to go out and spend it as soon as you can. So the economy is doing relatively well. We've always been an economy which has been able to work from home. About 45% of the population can work from home. We've got online retail sales, about 30% of total. So the UK is very adaptable as well. All good stuff. The problem is that some of the macroeconomic numbers, the way, for example, GDP is calculated here, different from everywhere else. And that gives a more depressing view of the reality.
So what does that mean for the BOE tomorrow, Paul?
Well, the bank, I think, is able to see through the data. It's run by an economist, which is always a good thing. And so I think that they are looking at an economy that is progressing nicely with the recovery. They've already tweaked the quantitative policy a bit. They've already slowed down the pace of bond purchases. And I think that they're going to continue to signal that, probably at the end of this program, that's it for the bond purchases. And we move to sort of an organic quantitative policy tightening.
Paul, let me move next door to the ECB. We had one of the Latvian policymakers today saying that the ECB won't rush to signal the end of the pandemic program. At this point, do we need to be assuming that there could just be forever QE?
Well, I mean, in a sense, central banks always buy bonds all the time. It's how they manage liquidity in markets. So there's always quantitative policy. All we're arguing about is the scale. So are we going to get large-scale quantitative policy? I think for the course of the next year, but probably not indefinitely. I mean, the central bank does have an inflation target, and that is something that is taken pretty seriously in the Eurozone. I mean, obviously, they keep missing the target, but they've got a new target to miss. And I think that with that, there will come a time when they are going to have to scale back liquidity supply, because liquidity demand will fade as Europe eventually gets into its stride with the economic bounce back.
Paul, I just want to continue this lap around the world and go quickly to China. We're starting to see downgrades to GDP forecasts because of the spread of the Delta variant there and the restrictions that are coming as a result. Do you expect a more pronounced deceleration because of that?
Well, China's facing really two issues, I think. We're already starting to see the effects of shifting consumer spending. So in the US and the UK, we're shifting to spending on having fun. And having fun is more service-focused than goods-focused. So if you look at some of the early data we've got on Asian exports from Korea, from Taiwan, the exports are fine, but they're slowing. Now, that's going to come to China too, of course, when we get their data. We're going to see perfectly decent export numbers, but it's less dependable as a driver of growth. So there was always going to be that slowdown. And then the Delta variant, of course, is affecting domestic demand, which is what people were looking to take over. China is rolling out vaccines more rapidly now. That is a positive signal. And remember, it's not actually the virus, but fear of the virus that does most of the damage.
Right.
But yes, I think that the more moderate views on Chinese growth are appropriate.
All right, we have to leave it there, but thank you so much for your insight today. That was Paul Donovan, Global Chief Economist at UBS. This is Bloomberg.
Assess the sector as a whole? Is it making a better case for itself at the right price at this point?
Most of the big hedge funds, most of the people that have been growing have been delivering very good performance. We have, but so is a number of the peers. It is definitely the hedge fund business is getting more about the large getting larger and generating more performance, being able to hire the best people, thereby generating better performance, thereby getting larger. So when you look at the performance of the largest, say, 20 or 50 hedge funds, the performance has been pretty good over a number of years, and the inflows have been pretty good. This is another quarter of positive inflows for us. I think one of the bits you're seeing at the moment is every client is worried about inflation. When they say they're worried about inflation, what they really mean is, I own a load of bonds, is that going to cause me a problem?
Friday is Jobs Day.
For every positive thing you point to, there's something less positive.
The June report fell short of estimates.
The unemployment rate goes up to 5.9%. It's one of those things where you say it's good news. The unemployment rate goes up.
What should we expect to see from July's report?
A lot of reshuffling. We'll continue to see hiring at large pace.
Are people looking to return to the workforce?
Businesses have a lot of jobs to fill. They can't find workers.
The July jobs report, Friday on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Danny Berger in London. Francine Lacqua is off this week. Now let's get the first word news. And researchers say that vaccines targeting the Delta variant may now be needed. The authors of a study looked at recent samples from 98,000 people in England. They found that vaccines' protection against development of COVID symptoms was down 59% from 83% earlier. That indicates the antibodies raised by current shots are less effective. Bloomberg has learned that the UK may block the $40 billion takeover of chipmaker ARM by NVIDIA. That's because of potential risks to national security. NVIDIA is the biggest U.S. chipmaker by market cap, and UK-based ARM owns the most widely used set of standards and designs in the chip industry. And Archegos Capital Management employees reportedly face losses of about $500 million after the value of a deferred play plan crashed. That's according to the Financial Times. Archegos, of course, was the family office that collapsed in March, costing several banks billions of dollars. Coming up next here on Surveillance Early Edition, we're going to talk about the global semiconductor shortage and the way it is affecting automakers. Philippe Houchois, Jefferies Global Autos analyst, will be joining us next. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y-12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance, and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London alongside Matt Miller and Kaylee Lines in New York. Francine Lacroix is off this week. It is all about deals today. My head is spinning. There's so much money sloshing around out there. Matt, I think one of the most interesting ones, to me at least, is CVC buying a 10% stake in La Liga, the Spanish football league. This is a really hot place for private equity right now because, one, no ticket sales, and two, they just simply see a lot of money to be made in sports.
Yeah, absolutely. And we have assets for $6.1 billion.
Cash and capital to deploy. We'll see how things shake out come the opening bell in about 4 hours' time. 17%. And as for the year for revenue, up showing some of the controversy around the company's labor policies and the profit. That's taking the stock.
In terms of the car stories for today, automakers reporting earnings. The chip shortage continues to overshadow what could otherwise be a strong recovery. Here's what we've been hearing from...
Has been impacting us. Continue probably throughout, I would say maybe first semester of 2022. Some, let's say, some fluctuation, some uncertainty and lack of visibility. It is important to have the meaning that the
profit, and yet the stock was down more than 5%. What's the consensus as to when we recover from this chip shortage?
I think is when there's some, but then if you look at projections of semiconductor content in cars over the next 10 years, as cars become more electric, more connected, potentially more autonomous as well, at least on an ADAS level, structural issues there. And most car makers, and some were a bit more optimistic. Well, the longer-term picture of the structural shortage is still unclear.
When do we get back? Unbelievable. There are no cars on the lots. To sticker prices. At what point do we get back to equilibrium? And then do we end up in a glut?
No, well, the question is, what is the next equilibrium? Because the U.S. certainly lifted off a very high level of stock and kind of instant gratification. You find the car on the lot and you drive off with it. The question is, what is the next normal for inventory? What level would the car makers rebuild, and in agreement with the dealers, of course? Because I think no OEM wants to go back to the old normal in a way. And the question is, what is the next level? And can we move to a bit more build to order, simpler vehicles, and maintain that nice squeeze on pricing? The squeeze on pricing has gone too far in a way. And we saw the US data for last month, sales inventory, and the lack of inventory is probably cutting into the SAR, as we saw in June. We saw it again in July. And but no, the question is, what is the next optimal level to rebuild to?
What do you think that level is, considering the pricing power that these car makers have been able to exercise? Is that not a lesson that it actually benefits them to produce less?
It is absolutely beneficial to them to produce less. Historically, we've seen average levels of 75 days of stock, much higher in light trucks, lower in cars. But it's very interesting because you look at over a number of years, Toyota, for example, has been carrying at least 20 days less stock than the Detroit 3. And they've been gaining share. In the past 3 months, they've been #1 market share ahead of GM. So I think it's also how you manage, how you sell. And the absolute level of stock is something that hopefully we're not going back to. And because we will get better pricing. We can also kind of price the option equipment better. So the number of benefits there. And we see that successful car makers like Toyota are able to operate with lesser level of inventory. That's the lesson for the others like
Right.
Ford, GM, and Stellantis.
If I could give you a very macro view of inventories, this comes courtesy of Jim Paulson over at Lefthold Group that says that when inventories are low, this is usually the signal of early cycle markets, of a bull market that's going to continue further. Is that big picture? Is that the same with autos? The fact that inventories are so low, that chart that Matt showed us, does this mean that good times will soon start to roll, no pun intended, for the auto industry?
Yeah. Well, I mean, you could see two things. You could have a cyclical recovery. All of a sudden, availability eases in your rebuild inventory. So the restocking is quite powerful for earnings and cash flow. So that's option A. Less desirable possibly because we go back to the old ways of the auto industry functioning with too much inventory. Effectively, a gradual rebuild gives time for the industry to change its business model potentially. And that would be more interesting. But you're absolutely right. In the US, there's definitely a shortage of supply and demand has gone back to peak levels. Europe is a different situation because we have less inventory depletion than we see in the US. And so the market is still 20-25% below the level of 2019. And what we saw in Europe is we never went back to the pre-GFC levels, even in 2019. And the question is now, how do we recover the timing and the magnitude of the recovery in Europe compared to the US, where there's no doubt about it.
Is the transition to all electric going to go faster? Has the pandemic accelerated that transition?
I think the pandemic in many ways has been beneficial to the industry. And one, I think we also pictures of a cleaner world about 12 months ago or so in the first period of shutdowns. And I think the awareness of the need to move towards cleaner transport has reached out more potential customers in addition to the regulation. And but I think the two go hand in hand. When do we start to have an S-curve adoption? That's less clear. We also have to see an industry able to actually produce those EVs in large quantity. And that's not a given at this stage.
Yeah, exactly, and to charge them as well. Philippe, thanks very much for joining us. Philippe Houchois, Global Autos Analyst at Jefferies Equity Research. Now, later on Bloomberg Surveillance, we're going to speak with the CEO of General Motors, Mary Barra, joins us. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo do Milton Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York. Danny Berger in London. Francine Lacroix is off this week. Now, concerns about China's gaming and technology clampdown are easing this morning after state media tempered its language. Still, the question over the next steps for Chinese regulation remains, and the consequences of that. In a new column, Bloomberg News editor-in-chief emeritus Matt Winkler writes, the past 2 decades were widely assumed to usher in the transition from the American century to the Chinese century, but the world's money says not so. And Matt, it's great to have you on set with us this morning, especially since you hired me 21 years ago, and one of the first things you taught me as a young journalist was follow the money. That was your mantra. And now we're seeing that if you do that, the narrative we've grown up with these past 20 years seems to be not coming true.
Yeah, that's absolutely right. In fact, if you look at the past 2 decades, that's all we have in the 21st century, it's increasingly an all-American century. Not much has changed, actually, from the 20th century. And by that I mean, if you look at the world's most valuable companies, the top 10 by market capitalization, 7 of them are U.S., that's been the case, by the way, for quite a while. That predates, this recent clampdown that you just referenced. And what it's about is technology. It's about consumer discretionary companies. It's about climate change. And all of those areas are where U.S. companies are robust and growing fast. And you know what those companies are, because they lead the hit parade just about every day.
Does China want their companies to be the largest and most powerful, though, or would the Communist Party rather be able to exert control over them? What does that have to do with this?
Yeah, this is very peculiar because China's rise has been all about globalization. It's been all about engaging the West and doing the West one better, if you will. And so this recent restraint that we're seeing just seems odd in the context of what has made China so successful during the past 20 years.
Matt, there has been a lot of foreign money flowing into China. Of course, a lot of that had to do with passive funds, starting to include be it Chinese stocks or Chinese bonds. Does all of that money now, and the way foreigners approach the Chinese market, does that need to have a drastic change given what's happened in the past month?
Well, we're already seeing it, because if you look at the weighting of the world's most valuable companies, China is less than 10%. It's just not there, and its share is shrinking. And if you look at the most successful money managers, take Cathie Wood, for example, most recently, she's basically exited China for the time being. And that's a big event, actually, if you want to think about performance in the markets.
And she is. I mean, you reference in your column, she's done better than, I think, all other mutual fund and ETF managers over the past 3 years and 5 years. Climate change is a huge issue for her, and you mentioned that it's a big problem for China.
Well, yeah, you're talking about the world's #1 polluter measured by CO2 emissions. I mean, it's twice, for example, #2 U.S. That isn't going to change anytime soon. And so if climate change really is where people are focused, they're going to look at companies, and companies are going to look at other companies, for solutions. And the solutions right now are really coming not from China. They're coming from the U.S. mostly.
All right, Matt Winkler, Bloomberg editor-in-chief emeritus, thank you so much. A great column out on the Bloomberg today. And don't forget, coming up later on Balance of Power, we will be speaking with a critic of big tech, Senator Elizabeth Warren of Massachusetts, of course, the Democratic senator from up there, at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
2022. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Amazon reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London alongside Matt Miller and Kaylee Lyons in New York. Francine Lacroix is off this week. Now, McDonald's is expecting its corporate workers to be in the office 3 days a week. This will provide them an extra flexible workday compared to before the pandemic. David Rubenstein spoke with the CEO of McDonald's in tonight's episode of Peer-to-Peer Conversations.
I certainly think one of the things that we saw was our ability to stay connected through technology. WebEx, Zoom, Amazon Chime. I've learned all the different teleconferencing tools, and they've all worked reasonably well for us. So I think we learned things there that we have the ability to stay connected. I think the other thing, though, that it highlighted for us is we ultimately are an in-person business. We're in person in the restaurants, or we're in person in the office. And so you lose something from culture, you lose something from a connectedness by being so remote. And so, while it worked well for the time, we're committed to getting back into our offices, getting back into the restaurants.
So will you be bringing back all your office employees back and say 5 days a week, just like before? Or are you going to say 3 days a week, or what are you going to do?
We always provided flexibility prior to the pandemic. So we had 1 day of what we called flex time prior to the pandemic, where people could work from home, or, if they needed to come in the office, we left it up to the employee. We're going to probably extend that. We are going to extend that to 2 days of flex time. But ultimately, it's about, you've got to do what you need to do your job. And so the expectations aren't changing, but if you have the ability to maybe have a little more flexibility, but a minimum of 3 days you need to be in the office or in the restaurant.
That, of course, was the CEO of McDonald's, and you can watch his full conversation with David Rubenstein on the David Rubenstein Show tonight, Peer-to-Peer Conversations. And now joining us is Tom Keene, co-anchor of Bloomberg Surveillance. He is joining us now. Tom, I know you also will be speaking with David Rubenstein a bit later on this morning.
Well, we'll talk to David about McDonald's, about what we're seeing with the variant. There's the headline just out now, Indonesia saying deaths pass 100,000, the first in Southeast Asia. That's the global sense of the pandemic, and it begins to affect, Kaylee, the yield market. You see it with price up and yield down, and the essential idea here is each nation's for themselves, but the sum total is a new leg up in the amount of debt with a negative yield. We're getting out to where we may breach what we saw a number of quarters ago. Kaylee, it's really worth watching. I watched a Swiss 20-year piece, negative 0.196. John Farrell thinks I'm out of my mind. He watches a German paper. Matt Miller thinks I'm out of my mind. He watches a Japanese paper.
Only because you taught me to do that maybe 10 or 15 years ago, Tom, or at least, I like to see what's going on. With the yen, I also like to see what's going on with the UN. And to me, China remains front and center here. Even as they relax their language a little bit, you still want to know what's the next shoe to drop.
It is, and it's a different Pacific Rim. As we mentioned, the headline from Indonesia with the real difficulties there. I actually looked for James Byrne Murdoch, John Burns Murdoch, Matt, at the FT today in his wonderful graphical work. And the bottom line is this is about Latin America and Southeast Asia. And with that Indonesia headline, you see that global angst that gives you price up in fixed income.
Tom, we're about 50 or so hours, I think, to the U.S. jobs report on Friday. Do we just all wait and see and not do anything until that point?
Yeah, that's the right counsel. They'll make a three-ring circus out of it. We don't do that. We're going to go beneath the headline date at 8:30 on Friday. ADP today, claims tomorrow. But you're right, Kaylee. You know what? You wait till you see those two large reports on Friday.
All right, right now the Bloomberg survey of economists is looking for 875,000 jobs on the non-farm payrolls number. Tom Keene, anchor of Bloomberg Surveillance, thank you so much. Now let's take a look at what else we're watching today. And Matt, we have more auto earnings coming up later this morning.
We do. I'm just looking, I just pulled up the Whisper number, and the Whisper is for 920,000 jobs, even though I realize that's slightly different than the survey. Maybe those Bloomberg participants who put together that number are a little bit closer. It's a very difficult number to predict. I'm looking forward to General Motors earnings. I'm looking forward to Mary Barra's interview coming up in just a couple of hours now. We're going to hear from the CEO out of Detroit, and you know, we expect to hear, obviously, great margins. We expect to hear that they've done really well with pricing. The question is, what's the outlook, especially considering, you know, the chip shortage? We've heard from so many automakers that they've done well in the reporting quarter. BMW, for example, as I said yesterday, and I said again today, it beat expectations by 25% on the bottom line, 5 billion euros in profit, but still the stock was down 5.6% in Frankfurt yesterday because of concerns about chips.
Yeah, I'm going to keep it in the world of cars. I'm watching Uber earnings after the U.S. bell today, after the close. Kaylee, you earlier in the show mentioned Lyft, really strong numbers, so the bar set high for Uber. They also dropped yesterday more than 4% on those concerns that New York City would require vaccinations for workers at restaurants, gyms, et cetera, and what that means for Uber. So I think analyst questions and executive commentary will also be really fascinating to watch, Kaylee.
Yeah, Danny, what they saw in the second quarter in terms of the rebound in ride-hailing demand, it will be interesting to see if that picture starts to change going forward, given all of these Delta variant concerns. I also am watching the Department of the Treasury because they will do their quarterly refunding announcement today. This could be a big one, not because anything will change in terms of their recent refunding size, this time around $126 billion, but the department could signal a scaling back of its quarterly sales of notes and bonds. Basically, they just don't need to borrow as much going forward, especially out into 2022. So that could mean a lot less supply. JP Morgan, one of the banks that sees the Treasury making a move in November, and predicts that the net issuance of notes and bonds will be at about $1 trillion less next year versus 2021. So that is a big deal for the bond market. And especially, Matt, as we talk about the Fed tapering, if you're also getting a pullback in issuance at the same time, I wonder what the effect of that really is.
They're not tapering yet, and that's the issue. So you could see prices continue to rise and yields continue to fall.
But both of those things could be happening come the fall. All right, that's something to watch today. But of course, there's also Bloomberg surveillance that you can watch just ahead. Thanks so much for joining us. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so.
which is the track that we are currently on.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Really starts to doubt the potential for reflation, the potential for growth, that can kind of spiral out of control.
There's always pullbacks, and mini corrections, maybe even a correction ahead.
The Fed wants to hike rates. Not now, but they will want to hike rates.
The Fed is flying as the rest of us.
The market's thinking the Fed does nothing. My guess is we don't get a tightening until after the next presidential election.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The week begins right now from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures down around about 0.1%. We're down a couple of points on the S&P 500. Front and center, Tom Keene, Vice Chair Rich Clarida, a few hours away.
It's going to be an important speech. It's really going to drive the markets. And John, I would suggest it's an overlay on what we see with the Delta variant worldwide. The Indonesia headline that we saw 10 minutes ago of the deaths in Indonesia. And John, the combination of Clarida and the Delta variant, you know what it gives you? More negative yield.
Let's do the Tom Keene victory lap. Lisa, brace yourself. $1,000 per employee that goes to get a vaccine over at Vanguard.
It took you forever
Tom,
to get to this. It
Please,
took you forever.
I was thinking forever
to get to this.
Carry on.
The victory lap of Tom Keene is long, just so you know, Lisa.
I'm going
to
say this again, and this is not an original idea as well. This is monopoly money, John. What's so silly here is the billions and trillions that we can't even distribute to people that are rental, aggrieved and all that. And you just get the money, get them vaccinated. And the key thing with the Vanguard announcement is the vaccinated get the money as well.
They do, and they have until October if you are unvaccinated to get vaccinated. Lisa, the corporate response in corporate America gathering pace.
And certainly taking the lead when it comes to get vaccinated. It protects you, it protects us from possible disruption, and it really raises the bar in terms of who gets vaccinated and how much freedom they have once they get vaccinated. I will say what I'm watching is the FDA. The expectation from the New York Times being reported right now is that the FDA will grant full approval to the Pfizer vaccine by early next month. And this may be something that triggers a greater pace of vaccinations, something a lot of people are hoping for.
Well, we've been waiting for that, that's for sure. We're starting to see some downgrades to China economic growth, Tom. I think that's worth focusing on as well. Restrictions building. I think in more than 40 cities, some travel restrictions on the mainland. That really is worth paying attention to.
It is, and it folds into the Fed meeting. And again, everybody anticipating the vice chairman's speech on this, John. I would suggest it's about the labor economy as well. Friday's jobs report. And John, I'm really tentative on this after what we saw May 7th, but the bottom line is there's a little bit of enthusiasm going into this report.
875 is the estimate. The ADP report a little bit later this morning.
Yeah, but what's the whisper number?
Tomorrow.
What's the whisper
Matt Miller says the whisper number is something north of 900. This isn't great for TV. Your equity market down 3 on the S&P 500, negative about 1/10%. Oh, Tom, 117.54, yields unchanged on a cent. Yeah.
Jack Grealish is
100 mil, TK. We can do this later. Euro dollar 118.57 is negative 1/10%. Lisa, muted price action going into payrolls this Friday.
Good morning, good morning. This is Wednesday. I feel like we should restart. You guys are whispering about something or other. I'll give you the whisper number, though, for the U.S. ADP employment change for the month of July, which we're getting at 8:15, as you mentioned. It's 638,000. That is the whisper number, 638,000. That is the expectation among economists surveyed by Bloomberg. The idea here is how much does this indicate strength in Friday's jobs report, which will be key for the Fed, at least in terms of how strong it is and whether it indicates they could start tapering their bond purchases in the near future. 10 a.m. we get U.S. ISM Services Index for the month of July. I am curious to see if we're starting to see any decline, any deceleration from the increase in Delta variants, from the increased risk aversion, since that does seem to be omnipresent in all of the economic reports. And as you said, John, in China, it's starting to lead to economic downgrades going forward. And at 10 a.m., both of you are talking about this, and rightly so. Fed Vice Chair Rich Clarida delivering a speech at the Peterson Institute. All eyes on what he says about inflation. All eyes on how many jobs report he indicates are important to see before he would be willing to vote to taper some of the bond stimulus. Remember, it is the big three. It is Fed Chair Rich Clarida, as well as Fed Chair Jay Powell, and of course John Williams from the New York Fed. They determine the path of the Federal Reserve, so this will be a very important speech.
Stop whispering, you sound like the president. Just a message I received. I have no idea what that's about. That's rude. Lisa, thank you.
Wait.
Lisa,
you
thank
sound
you
like
very
the president?
much. The president whispers sometimes.
Oh, yeah,
apparently.
that's right.
Leans into the microphone when he's delivering a speech, just for emphasis, apparently. Not judging.
He got that from me.
Did he, Tom? Citi cutting U.S. equities to neutral, Tom. Bond yields seen rising. 10-year Treasury yield over at Citi, the team led by Robert Buckland. They're looking for a move to 2% into 22, and 70 basis points of it driven by real yields. They don't like big tech and growth equities because of it. That's their call.
And we're seeing a lot of people adjust here. John Stolfus yesterday with some optimism. I believe Mr. Lefkovich darkens the door here later on in surveillance, John. But, you know, people are going to tweak around here. And like we saw yesterday, we're going to get a lot of mixed reports. We're going to tweak even more about Friday, 9 a.m.
70 basis points of real yield move. Lisa, that would shake things up, a 70 basis point move.
Especially from these record low yields. I don't know, though, what could potentially change that. I mean, Goldman Sachs coming out and saying the negative real yields that we're seeing right now indicate stagflation. If that's the case, what could shake that perception, John?
Well, they like the cyclicals. You don't buy Japan if you think we're about to get some stagflation. They raised Japan to overweight. That's what they're running with. They like the cyclical story over in Japan. They like the cyclical story, I imagine, over in Europe as well, and in the UK too. They keep the overweight on UK equities. We'll work our way through that call a little bit later. This is how the week stacks up now. The week really does begin right now this morning. The ADP report comes a little bit later. ISM Services at 10 Eastern. Vice Chair Rich Clarida will be speaking as well. Into tomorrow, initial jobless claims, and on to Friday when we get the payrolls report. Let's bring in Jennifer Lee quickly, BMO's senior economist. She joins us on the phone. Jen, great to catch up. Just walk me through what you're expecting from Vice Chair Rich Clarida at 10 Eastern.
Oh, good morning, everyone. So I expect him to probably just sort of stay the course and join the Fed Chair Powell on what he is talking about for the jobs market recovery. And he's probably going to still emphasize that the recovery is still a ways off, to quote the chair himself. Although I am hopeful, I guess, because there is a lot more debate now going on within the Fed. You know, you've heard from the new Governor Waller saying that if we get, you know, about 800 to 1 million jobs in the next couple of months, you know, he would call that significant further progress and would start the taper talk hopefully by the fall. And of course, Bullard has always been quite bullish on that front. And even San Francisco Fed President Daly yesterday, you know, she was saying that there's no reason to expect some of those permanent or highly persistent features of the labor market to become permanent, I guess, the factors that are tempering the labor market. So I'm not sure why there are some people that are saying that what she was saying was dovish. I thought it was actually more on the hawkish side. So, but again, to answer your question, I think the vice chair is going to probably support what the Fed chair is saying.
Jennifer, tell me if we get a good jobs report, how it changed Fed policy, and does it change your view on the American economy?
It depends on what we're calling about for or what we define as good. I mean, we are actually below expectations with our call for a 675,000 increase, but under normal circumstances, that would be like an amazing number overall. But I think as long as we continue to see, you know, over 500 to over 600,000 every month, steady gains, cutting away at those losses of 22 million that we saw last year, you know, that to me would be further progress. Whether or not that's going to be enough for the Fed chair to sort of drop the hint at Jackson Hole at the end of this month, you know, that remains to be seen. But that could be, you know, a strong number could actually prompt that hint to be dropped.
Jennifer, based on where we are economically, do you see any chance that real yields could rise by 70 basis points in the near future?
I think there is a chance. I mean, the bond market, it's obviously, everyone knows, is so incredibly volatile. But as long as we continue to see, again, steady progress in the labor market, we continue to see strong data coming out of the business side as well, and the fact that households, I mean, we always have to remember that households have plenty of savings, and that's the biggest, I think, support factor, I think, for all of this. And, you know, amidst all of the talk of stagflation and everything, households have a lot of savings. They're demanding plenty of goods and services, and that is huge. You know, businesses are actually turning away new work. I mean, who would have ever thought that was going to happen, because they just don't have enough inputs. They don't have enough people. So that, I think, overall is the biggest story. And once we start seeing some of the alleviation in terms of the pressure from the supply side, people starting to get off the sidelines and return back to the labor force, we can totally see bond yields continue to head higher by the end of the year.
Jennifer Lee, good to get your call on this market and the economy too. BMO senior economist, working our way through a really busy week. It picks up speed from here. Looking at the bond market over in Italy, Lisa, your 2-year yield, negative 50 basis points. We took a little look at this yesterday, and now again, just a drop lower by about a basis point.
And this really highlights this move lower into negative yielding territory around the world. I mean, this is the first time ever that the Italian 2-year yield fell below the ECB deposit rate. Just put that into perspective based on Italy's finances. But this has to do with the entire German curve moving negative, the fact that the Japanese 10-year is at 0%. I mean, all around the world, what are we pricing for, John? This does not sound like a dynamic economic recovery.
A QE for a long time, if that's long enough for you. The Latvian central bank governor was out this morning speaking, and he was saying basically forget September. Forget September. September is not the time to have a conversation about removing the pandemic emergency purchase program or offering any kind of insight or guidance on when it ends.
You asked the question yesterday. You showed the Goldman Sachs Economic Financial Conditions Index and showing that it's at a record looseness, right? What are we loosening for? If we have a record loose financial conditions kind of backdrop, what is the goal of having even looser conditions, of even having more QE? That is going to be something I want to hear from Fed Chair, Vice Fed Chair.
Basically, the theory is you keep demand robust, strong, and Tom, you keep demand robust enough, and therefore the supply side economy starts to respond over time through the year ahead. I guess that's the argument.
That was the argument a year ago, and as I believe you mentioned yesterday, John, it may have been Lisa, this is a new place we're in. I looked very carefully today, John, at the per capita deaths in Louisiana and Florida. I'm sorry, it's not August 2021, it's March 2021. Those are grim vectors.
There's a lot to discuss. So the next hour we'll catch up with Steve Cheverone of Federated Hermes on this market. Record highs into Wednesday. Your equity market down about 3 points on the S&P. We're negative 0.07%. Into the bond market, yields unchanged, 117.54 on 10s. Tom Keene, Lisa Abramowitz, Jonathan Ferro. This is Bloomberg Surveillance.
With the First Word News, I'm Rishka Gupta. Researchers say that vaccines targeting the highly transmissible Delta variant may now be needed. The authors of a study looked at a recent sample from about 98,000 people in England. They found the vaccine protection against development of COVID symptoms was 59%. That's down from 83% earlier. That indicates the antibodies raised by current shots are less effective. And in China, the widest coronavirus outbreak since the start of the pandemic is hampering tourism and spending during the peak summer holiday. That has analysts reviewing their economic growth projections. Nomura has lowered GDP forecasts for the third and fourth quarters. The highly infectious Delta variant has spread to almost half of China's 32 provinces. And the CDC has extended a ban on evictions in parts of the U.S. with high transmissions of the coronavirus. The new ban will be in place till October the 3rd, and that move is likely to appease progressive Democrats for now. But President Biden warns that the new ban will face legal challenges and may be found unconstitutional. The British Navy says a potential hijacking of a ship off Iran has ended. Unidentified people were said to have boarded the ship yesterday. Those boarders were said to leave today. The incident took place after a possible drone strike hit as an Israeli-operated ship in the region. 2 sailors were killed, and the UK says Iran was probably behind the attack. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
If inflation did seem to be persistent, the Fed wouldn't hesitate to act, and that you have the tools to deal with inflation. What do you say to critics on Wall Street who say, yes, you have the tool to deal with inflation, you raise interest rates, and then historically plunge the economy into recession?
Yeah, that's exactly the kind of logic, I think, that you want to avoid, that you get too far out of alignment with what's actually happening in the economy, and then you really have to react more strongly than you'd like, and possibly causing disruption in the economy. So you don't want to be in that situation. I think the risk management here is that if inflation does come back down in 2022, we're in great position for that. We're exactly positioned for that. But if it doesn't, we're not in such great position. So I think for that reason, we want to have some flexibility on this taper.
I assume you have a lot of people saying the food isn't as healthy as they might want it to be. Is that the biggest challenge, or just growing the company?
Ray Kroc had a famous line, if you're not green and growing, you're red and rotten.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
The courts made it clear that the existing moratorium was not constitutional. It wouldn't stand. In the meantime, what I've been pushing for and calling for is we have billions of dollars that we've given to states to provide for rent and utilities for those people who can't afford to stay in their home.
The President of the United States there from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bravitz, I'm Jonathan Ferro. Wednesday morning, and here's the price action on the equity market. We shape up as follows. Your equity market on the S&P 500 down 3. All-time highs into Wednesday on the S&P. We're down about 0.06% on futures. In the bond market, yields unchanged, 117.54. Citi, led by the team by Robert Buckland, looking for a move to 2% through 22.
Stunning.
In the FX market, euro-dollar 118.59. We go nowhere. We're down about 0.04%, negative 0.04% on that currency pair. Some news out of Beijing I want to touch just quickly.
Please.
Beijing subway to restrict traffic from Thursday to control the spread of the Delta variant over in China. We've seen more than 40 cities across China restrict travel. This from Beijing, the subway to restrict traffic from Thursday to control the virus. And banks are starting to cut the outlook. Nomura goes first, Tom, cutting the third quarter growth projection to 5.1 from 6.4 previously.
Big move.
Seeing a 4.4% expansion in the final 3 months of the year, down from 5.3%. These are still big numbers, but it's just the change I'm interested in here, Tom. For full year, Nomura seeing 8.2% now from 8.9% previously.
I would say anything quarter to quarter under 6% always gets the attention. I mean, the bottom line is China, 3% recession. We're not there yet, John, but anything under 6% gives pause, to say at the least. There's too much to talk about in economics, finance, investment, also international relations, and then there's the reality that the Democrats are going to lose the House. Greg Valliere leads his morning AGF note. With that, the Democrats have been told by their leadership they're really in trouble. Anne-Marie Horton is aware of this, our Bloomberg Washington correspondent. Anne-Marie, there's like 14 things to talk about, but maybe what we ought to be talking about is a Pentagon officer was gunned down yesterday outside the Pentagon. We don't know the difference. And what Valliere is talking about is there is no other topic than crime. Is that even under discussion in your Washington?
It's not. And to be honest, Tom, when you have headlines like that, you get a little bit worried at the moment and then you go on about your day, because sometimes it just happens almost monthly. There was a shooting just in Washington, D.C. in the central town just about 2 weeks ago, dead center, 14th Street, right by the Diplomat. What you're referring to, though, is about the rising crime we are seeing in urban areas. And we do know that urban areas are led by a lot of Democrats. So what the worry is for the Democratic Party and what they are trying to do is get a little bit tougher on crime, because the Republicans do see this as an opening for the midterm elections.
But you don't see it within the dialogue. Just one more question on this, because I know John wants to get to 14 other topics. But Nixon did this in the early 70s. He nailed this dialogue. There isn't that Nixonian dialogue, is there?
There isn't this dialogue right now, but to your point, there's 14 other issues on the rise right now in Washington. There's the eviction moratorium, there's COVID, there's a number of other issues that this administration and both Republicans and Democrats are focused on.
Anne-Marie, let's start with the eviction moratorium. How bizarre is it to see the President of the United States oversee a CDC that issues a decision and then he questions the constitutionality of it? I'll get my words out, Anne-Marie. It was very confusing in the last 24 hours. Was it confusing for you?
It was, because it was an absolute U-turn, and the Supreme Court made it clear that to do this eviction moratorium, to extend it, and we should say this is a new one, but to have another eviction moratorium needed congressional approval. And then you have the administration backing the CDC in this fresh eviction moratorium in the hopes that this would likely keep millions of renters in place and not put people on the street. But the president himself is talking about the obstacles. So really the strategy just seems to be, even if there are legal challenges ahead, it will buy them time to try to get out some of that $47 billion of assistance that is allocated for these renters.